for those of you who don't know Anish, Anish is the head of research at GST Investments. It's an equity advisory firm based in Mumbai, and you can go to the GST Investments Twitter handle um, and Anish's Twitter handle in order to be able to learn a little bit more about what they do. So Anish, are you also based in Mumbai?
Yes, I am.
Awesome, awesome.
Yes.
We should connect offline sometime.
Yeah, we should for sure. Looking forward to it. Huh?
Cool.
Yes.
So today, Anish is going to talk about simplifying the pharma sector, and he's got a presentation, and then we'll do some Q&A as well. We've got some questions from the audience already. I think Utkarsh sent you the CSV file. He's a bit down with COVID right now, so I'm sort of like filling in a little bit more for him. And yeah, we can take those questions. We can have some interactive discussion, however you want it to go.
Yeah, I've actually like inculcated most of the questions into my speech only, and after that, like if anyone has additional questions, like we can take that. Is that okay?
Sounds perfect. Let's go.
Okay. Okay. So firstly, I want to like thank the Delhi Investors Association for organizing this event, and I hope that each and every one of you and your families are doing well. I would also like to thank all the participants for taking their time out on a Friday evening, and I hope that we all become more informed investors afterward compared to what we are currently. I personally look forward to learning more than what I have to convey, from this discussion that we are going to have over the next few hours. AK, could you mute yourself? Yeah, okay. So this is purely an educational exercise and is designed for investors who are starting up in the pharmaceutical sector. So we will continue to discuss a lot of companies in between, but better not construe them as investment advice. And the part will be more clearer once we get to discuss the risks that are common with this industry. So I understand that some parts of my presentation can become a bit heavy for the investors who have little experience with the pharmaceutical sector. So feel free to stop me and I will explain it further. You can contact Krishna and Saket or anyone else in the speaker forum and they will ask me the questions and they can ask me to explain it further, whatever is causing trouble to you. So do not worry. I will try to simplify each and every segment and terminology so everyone can relax and try to absorb as much of it as feasible. Becoming an expert investor in this sector is a dynamic and a very, very long journey. I'm just a few steps ahead of you all. So feel free to point out leakages in my thesis, as the main motive is to be correct, such that we all can create more wealth for our clients and ourselves. So before I start, I hope it is fine if I switch between English and Hindi for the benefit of wider comprehension, Krishna.
Yeah, sounds good. If at any point you're not able to understand what he's saying, just feel free to back channel me, and we'll make whatever language adjustments are necessary. Cool, Anish, you can go ahead.
Hello.
Yeah, you're audible.
Okay, thank you. So I'll start. So as you guys might have already noticed, like pharmaceuticals is an umbrella sector. So what do I mean by that? So it has multiple different sectors inside of itself. Some parts, some subsectors will be cyclical, like the US generic medicines. We will go deeper. Some secular growth, structural stories, they continue to grow even if we go through recessions, like the Indian pharma market. Some will have a very high entry barrier, whereas few will have little to no entry barrier, so there will be extreme competition there. So there are multiple subsectors in the pharmaceutical umbrella with very different business economics and growth prospects. And I would definitely say that we all are lucky that we get a thriving pharmaceutical industry in India. And let me be very honest, one can just be a pharmaceutical investor and do very well over the long run. At times much better than the broader markets. And this is not my hypothesis. BSE Healthcare has delivered a 20% CAGR over the last 20 years. Not one, not five, not 10, 20 years, and even a 15% CAGR in the last 10 years. And those who follow even a little bit about the pharmaceutical sector would know that the major contributors to the index, like Sun Pharma, Lupin, Cadila, are well below their FY15 highs as of date. So for 7 years, they haven't performed, and even then, the sector has delivered a 15% CAGR. So also not to forget that post-COVID, we saw a massive re-rating in the pharmaceutical sector, which made investors anywhere between 2 to 5x in a single year. We will explore that further. So before going into the segments of the pharmaceutical business, as I said, it's an umbrella sector. Let's get some very basics right. So the global pharmaceuticals market is a $1.5 trillion market. And this is a part of the whole total healthcare sector. And healthcare sector includes the hospitals, diagnostics, which is $3.5 trillion market. And both of these markets are growing at a much faster rate than the global GDP rate. So it's a high growth market. It's like 1.5 to 2x faster growth compared to the global GDP rate. And we will see that this is something that is happening across the world, even in India. So patented medicines make up 75% of the total. Okay, 75% of the total $1.25 trillion market. The largest pharmaceutical companies of the world spend tens of billions of dollars every year to do innovation, to discover new medicines. So they invest a lot of money to do lab research and then do clinical trials. And the average cost of developing a new drug, which has never existed before, and then getting them approved from the US regulator, which is the US FDA, costs nearly $1 billion or 7,000 crores in rupee terms. So going the innovation way is no more easy than throwing darts in a dark room. So they obviously expect a very high return on capital. So due to this, US FDA grants them exclusivity for 8 to 12 years. So if you invent a new drug or if you discover a new drug, you get 8 to 12 years of zero competition. And what happens after that? So after that, the patent ends and then the generics enter the market. The generics are allowed to enter the market. So, what are generics? And when I'm talking about the Indian pharmaceutical industry, I would be generally focused on the generic side. We are not at all focused on the patented or innovation side at this point in time. There are plans for the Indian pharmaceutical industry to go the innovation side, but it is a bit longer, and we will focus less on that. So, what are generics? So, they are basically a copy of the original drug, of the innovator drug. The person who did the innovation to create a new drug. Now, after 8 to 12 years, when the patent ends, new players who have exactly the same medicine, you know, they will work exactly the same, just that the packaging will be different. The size, color, taste, or shape might be different, but it will work the same. So imagine if the initial drug price before the generics entered was 100 rupees. So as more and more generics enter the business, initially two, then three, then five, 10 players start selling the same drug, which work the same. These drugs enter the market, then the market faces very high price competition. The price can go down 80 to 90%, and that is what happens all the time. So that is what is a generic, which is a copycat of the innovator drug. So they just copy the chemical formula and try to backward engineer it and then get it approved, and then you can sell the exact same drug. It will work the same in a different packaging, and that makes up nearly 25% of the global pharmaceutical market, which nearly is a 300 to 400 billion dollar opportunity. Of this, the Indian pharmaceutical companies have like a 12 to 15% market share globally. So they do a sales of $40 billion, which is nearly 3 lakh crores. So of this 3 lakh crores, 50% of this market, which is 1.5 lakh crores, is what they do in India. So they sell in the Indian market and they generate a revenue of 1.5 lakh crores every year. And the 50%, rest 50% comes from exports, which is majorly to the US, which is another 1.5 lakh crore. So if we go into a bit history of the pharmaceutical market, then we would see that from being a net importer of drugs in 1970s, India is now one of the largest exporter of drugs and vaccines. India is the third largest in terms of volume and 13 largest in terms of value. 13 largest in terms of value and third largest in terms of volume. Why? Because we are largely focused on the generic side. We are much less focused on the innovator side, and we focus a lot more into the low value and high volume side. you know so from a turnover of just 1700 crores in 1990, we are at 3 lakh crores, as I mentioned previously. So we will start our subsectors with the Indian and emerging markets business. And the India and emerging markets business is more of a branded generics business. And what do I mean by that? I will explain each and every word. So we will go a little bit, before that, we will go a little bit deeper into what is OTC and prescription medicines. So starting with OTC or over the counter drugs. So these drugs do not require a prescription from the doctor and they can directly be purchased from a pharmacy. For example, if I need an aspirin, it relies on my self-diagnosis. For if I have a headache, which is like a very minor inconvenience, then I would directly go to the pharmacy and get me an aspirin. These are much milder drugs and they have a much wide margin of safety. Like even if I would have something other than a simple headache, like aspirin wouldn't cause me a lot of problem. It's a very plain drug which wouldn't cause a lot of reactions to my body. And anyone who has directly gone to buy these drugs know that they are very cheap. On a commercial term, this business is very less lucrative and only makes about 10 to 15% of the total pharmaceutical sales in India. So where is the gold mine for these companies? So it is what is prescribed by the doctors or prescribed medicines. So as the name suggests, these are very strong medications that require a doctor's prescription to be brought from the pharmacy. For example, I'll give you an example, fentanyl. So it is given to final stage cancer patients to numb their pain and is extremely addictive. So if you go and ask fentanyl to a pharmacy guy, he won't give you unless you have the prescription for it. So as I mentioned earlier, the Indian market has very few patented exclusive medicines with zero competition. Normally, even the patented guys, if the patented molecules do enter in the Indian market, they have to take a very big discount. And sooner rather than later, they will see at-risk launches. So a lot of competition will start cropping up, even though it's not allowed. So the business dynamics are very different in India, compared to what I said previously, and I will try to explain them. So one has to ask how one company differentiates the molecule in India or emerging markets, which has very similar dynamics. So they create brands in India. So I'm hoping that you guys all understand the power of brands, but I will try to do it anyway. So black coffee, a normal black coffee in a generic cafe costs nearly 80 to 100 bucks near a place I stay. And just beside, there is a Starbucks which charges you 250 to 300 for the same black coffee. Literally, I have drank both of the coffees and both are same. And it is almost always full of people, while the generic cafe, which has all the amenities that Starbucks provides, struggles to attract the crowd. That is what pharmaceutical companies in India do. They compete with branded generics, where every company on the market would have the same molecule but would sell under a different brand name, which are companies' proprietary trademark. For example, paracetamol is a molecule, it's a basic chemical formula, but it is branded as Crocin by GSK and branded as Pacimol or Calpol by Ipca or branded as Cipmol by Cipla. So why do they do it? The largest brands can charge 50 to 100% and even 5 to 10x premium than the average brand. Here, the Crocin by GSK is 3x the price of Cipmol by Cipla, selling the same products, which does exactly the same thing. But as I told you, the power of brands. But contradictory to my Starbucks example, a consumer would not know the difference between Crocin, Pacimol, or Cipmol. So why would he pay 2x, 5x premium, even if all work exactly the same? And at times they are manufactured by the same CDMO, contract manufacturer, which does it for each and every brand. So why the customer would pay extra? Here is where doctors come into the picture. Pharmaceutical companies in India incentivize doctors to write their brands in the prescription. And the faster a company captures maximum doctor's mind and his wallet meaning they give him very hefty incentives for selling their drugs, the sooner it becomes the market leader in that particular molecule. And just to add here, Indians treat doctors as gods. So whichever brand gets written in the prescription, consumers exclusively prefer to go and buy that brand, no matter what anyone else says, no matter what their pharmacist says. they would just want exactly the same brand that the doctor has written. You know, that's what pharmaceutical companies also try to do. They try to create a perception of higher quality of certain brands, and that of price quality correlation is fostered, through their brand promotion measures. And this is what they do by capturing the doctor's mind, and then incentivizing him. So you would ask me, why wouldn't new companies come and just give higher incentives to doctors to change their minds? So is it is the moat really that strong? Is the moat really that wide? So what we have seen is that it is easier said than done, as doctors on average are a bit lethargic to change. And usually they continue to write brands which have higher mind share with them. Also, the medical representatives, which are the people who are hired by the companies, the leaders, and each and every company hires them. And the medical representative of the existing market leader will already have a very strong relationship with the doctor, which he would have maintained for many years to come. So it is extremely difficult to displace an already market leader brand. So obviously, it's a very high entry barrier industry. And to say that, I will put out some pointers so that you are better able to grasp the scale of entry barrier that we are talking here. So, the Indian pharmaceutical market, as I said, it's a 1.5 lakh crore. That's the revenue that they generate by selling in India. Of that, 30 players, the top 30 players control 75% of market share. And of that, the top 10 players control 45% of market share. So entering and I'm talking about the top 10 players, top 30 players. And if I tell you to guess how many players are there in the Indian market who sell these medicines, there are over 900. And of that, 30 players continue to dominate it. It's similar to a FMCG business. The largest of the brands continue to become larger, and entering and trying to sell another biscuit brand is very easy, but then to create a brand around it and scale it up to a 10 crore business or a 100 crore business is extremely difficult. There are 80,000 brands in India. Of that, only 290 brands have like 100 crore plus sales. And just, I'll ask you, what's the average age of the top 100 brands in IPM? The average age is 18.5 years. You can try to create, you can try to bring a lot of brands into the market, but it usually takes a lot of time just to become the leader. And trying to displace the leader in a particular category, it never, almost never happens. It's something that just continues to say, if you capture the doctor's mind in that particular category, you will continue to churn a lot of money. It's that simple. Overall, this is a secular, recession resistant, but a slow growth business, as I said, like a FMCG business, where companies with dominant brands in dominant therapeutics can continue to grow at 1 to 1.5x the GDP growth rate, which is nearly 8 to 12% as the Indian pharma market expands. So you can call this, as I mentioned, like an FMCG type of play. It is a high margin and it's a cash churning business. As you will notice that MNCs like Abbott and Sanofi, or even an Indian player like Eris, which are solely focused on the India business, churn out a lot of cash. As the return on capital employed is very high, it's 40-50% at times. The point is that the growth is usually much lower, as gaining market share is extremely tough. As I've already said, it's a very saturated market. And what I've heard from my friends who work in this industry is that sometimes for a single molecule, you can observe that there are on an average 15 to 20 brands. So, which is why differentiating oneself is very hard to do. So, additionally, that is true, but then again, capital investments that you require to grow in this business are minimal. So, these companies continue to make a lot of cash, as I mentioned, and they will continue to reward their shareholders for long periods of time with the amount of money that they make. So why do we see that there is a very long runway for growth in these companies? Yeah, the Indian business is underpenetrated. It's very simple. As even though like India makes the cheapest medicines in the whole world, India is the pharmacy of the whole world, but Indians can't afford it. An average Indian, if you go into rural areas, if you go into semi-urban areas, an average Indian wouldn't be able to afford the medicines. Even though we are the cheapest in the world, that's how poor we are. So over time, as and when the GDP per capita improves, you will see that the buying power of an average Indian improves, And the pharmaceutical market in India is a structural story. That's why it can continue to grow at a much higher rate than the GDP growth rate. That's what we see. So, what to look for in choosing companies in this space? Just to reiterate, it's all about strong brands. By which I mean, check for companies which have 100 plus crores brands, the brands which are doing 100 crore plus sales in a single year. Check for how many brands do they have in 10 crores plus in a single year. And if a company has more and more of them, it's better. you know Also check as to by how much has this number moved over the last 10-15 years, so that you'll get an idea of, is this company able to continue to create such brands more and more. And over time we have seen that these are only the players who have a sort of pricing power. The leaders have the pricing power in their particular category. Other players like the generic or the fifth or seventh brand won't be able to increase price at the rate the leader can do. And secondly, check for companies which are therapeutic leaders. For example, Sun Pharma has leadership in cardiac, and thus it has been seen that it is able to grow its business at a much higher rate than even the cardiac market. So imagine if cardiac market is growing at 9 to 10%, Sun Pharma has grown in the cardiac business at 12 to 13%. And that is what we have seen. If you are the therapeutic leader, you are able to come out with newer products in that respective therapeutic. For example, new innovative cardiac medicines you will be able to come up with, and then you are able to push it to the specialists and super specialists of that respective therapy, and then you can create new brands. And we have seen that companies do it again and again. Like Cipla, who is the leader in respiratory, has done it quite well. If you see the growth that Cipla has shown in the respiratory business over the last 10 years. So, as I said, medical representatives have a very strong relationship with the specialists and super specialists of the respective therapy, whether be it anti-diabetic, where we can see that the leader is Abbott, pain management, or dermatology, or any other therapeutic. Therapeutic is basically the segment that you're targeting. For example, cardiac, anti-diabetic, and stuff. So, additionally, these therapy leaders have been able to create mega brands also. So that is something that you should look for when you're buying companies in this business, specifically targeting the Indian pharma market. Always go with the leaders who have very strong brands, and if they have the leadership in their therapeutic, then it's better. The risks that we see for this particular segment of the pharmaceutical industry. So, approximately 20 to 25% of the Indian brands come under the National List of Essential Drugs, or NLEN, which means that they are currently price regulated. The price is capped. So, that means that there is a limit to the price a manufacturer can charge on their drug. And this list is just continuing to increase year over year. And this is something that you have to track very closely. Overnight, I've seen a big chunk of the revenue for a pharma company in India can go away from 100 crores to just 25 crores because the price went down by 75%. There is a positive there also. So because you are the market leader, now you're much cheaper, but then you will increase your volumes. You will increase your market share in that particular molecule. But overall, the market shrinks at a very rapid pace. And then even if you have like 100% market share, you won't be able to do anything. You lose a lot of your revenue. And this is something that Indian government, you have to think how the Indian government thinks. Obviously, Indian government wants cheaper medicines for most of its population, and that's what they will continue to do. They will continue to bring good medicines, the medicines which are making a lot of money for a company like Abbott, for a company like Sun Pharma, for a company like Cadila, and they will try to bring it in LLEM, and this is a big risk. Secondly, there is Jan Aushadhi Kendras. So what are they? So these are pharmacies that are currently cropping up across India, and they only sell generics. So they don't sell branded products. So obviously, because they sell only generics, they offer medicines at 50 to 90% discounts to the normal rates. As I said, that the brands usually charge 5 to 10x premium because they have created the brand and they have the highest market share. However, we do not see it as creating any issues in the foreseeable future for now, because the current volumes of these generic medicines are very weak. At least they are extremely weak. They are less than 5% market share in the metro cities, where majority of the profit pools of all these listed pharmaceutical companies come from. And currently, it's unviable for the private players to profitably run Jan Aushadhi Kendras. As I said, pharmacy, it's a business of volumes. So that's a risk. Another risk, another area of a risk that we see is the growth of e-pharmacies. You might have, most of you who are in the space might have ordered from an e-pharmacy in the last 2 years, and we see that they are growing at a much rapid pace. Like there have been reports that they can grow to 7-10 crore people by FY25. And there we see that there has been a lot of consolidation, like e-commerce major Amazon has entered. We see Reliance Retail has acquired Netmeds, Pharma Easy acquired MetLife, Tata Group is acquired 1mg, Flipkart acquired Sasta Sundar. So this is a big risk. If there is a big consolidation in this space, then the some part of the margin goes away from the supply chain. And why it's a very big risk for the consolidation side, we will also discuss this part in the US medicines that we'll discuss, US medicines, and why the US pharma went through a downturn. This is one of the biggest reasons, and this is something that we need to closely track. And to even fight this, like all the Indian pharmaceutical companies have come up with something known as ABCD technologies, where they are trying to create their own digital supply chain such that they don't lose because of e-pharmacies. So this is a very dynamic field which we have to continuously study as to see how it develops. So overall, yes, consolidation. And as I said, this is a secular growth story. So whenever you're buying any business related to that, you can understand that it's a FMCG SQ with a little bit of risks that come with it. FMCG, they will not put a price cap on the bread that you buy or a biscuit that you buy, but here they can. And that's why you need to have a diversified portfolio. You need to be looking for players who have therapeutic leaderships. And there are other intricacies also. Once you start reading about the pharmaceutical sector, you will understand. Secondly, on the US business. So coming on to the US business. So yeah, in this place, the brands have no value, and you will ask why. So coming on to the paracetamol example. So in India, if you go to a doctor, he will write Crocin, he will write Pacimol, he will not write paracetamol, which is a brand. Basically, some brand pays him, as I've said you, and that's why he writes the brand name. But in US, the doctor will write paracetamol in the prescription. They will write the molecule name, and why they write that? Because so that there is no difference between the different brands and pricing is very similar. So when you take it to the pharmacist, he will give you the cheapest brand out there. So this give you a basic idea about how the commoditized nature of the drugs that are sold in US. Again, in no way you can differentiate your drugs in US. So still Indian pharma companies go and fight nail and tooth for the market, and you would ask me why. The reason is the size of the market. As I mentioned earlier, the world generic market is worth $400 billion. Of this, US is 75 to 80% of the market, approximately 300 to 325 billion dollars. They are the largest generic market in the world. So if you are in the leader of an Indian pharmaceutical, if you are in the shoes of the leader of an Indian pharmaceutical business, then if you want to grow, there is no other way. As I told you, the Indian business is very much saturated. For a single molecule, there will be 15, 20 brands, and it's very tough to incrementally gain market share or introduce new brands. So if they want to grow at 30, 40, 50%, there is no other way for them to grow other than going into US and then selling their drugs and trying to become the lowest cost producer. And we'll discuss more. So so before we go a little bit further, just remember the term ANDA, which means the filing for selling a generic in the US. So before you are able to sell a medicine in US, you have to file an ANDA and get it approved by US FDA, which is the US regulator. Before that, you won't be able to sell. What better way to explain you about the cyclic nature of the US business than to talk about why Sun Pharma and many other large pharma companies have still not reached their FY15 highs. 7 years of no stock returns. Simple. So long story short, like their India business is thriving, and you will observe that most of the cash flows that they are making in the India business is going to fund all these US business ventures and other developed market ventures. The reason is uh, they are barely breaking even or even loss making in the US operations. They obviously compile their EBITDA, so you won't be able to see what exactly is going on. But to just give you an idea, the Sun Pharma in their India business makes an EBITDA margin of 50%, but overall they make a EBITDA margin of 20-30%. So imagine why. Because the US business is barely breaking even or loss making, and we will try to understand why is this exactly happening, and what were the reasons due to which the cycle turned in US, and the companies which were growing at 30-40% CAGR are not able to break even today. So first thing, so the competition came in droves. US FDA, which is the regulator for US medicines, wasn't happy with the high prices that the US consumers were paying. And US consumers were paying before FY15. So in FY15, they lobbied the United States president to sign into law GUDFA, which is Generic Drug User Fee Amendments of 2012 Act. So this act was designed to speed access to safe and effective generic drugs to the public, and that's what exactly happened. The approvals for ANDAs doubled in 2 to 3 years. It went from 500 to 550 in a year in FY15 to 1100 plus in FY19. So this led to a flood of generics, aka ANDAs. As I've already told you, ANDAs are something that you have to file if you want to sell medicines in US. So this led to a flood of generics in markets, which destroyed the market. So it's basic supply and demand. That's how any commodity works. So suppliers increase at a much rapid pace compared to the demand. Simple. And due to which the pricing nosedived. And this is what happened. And this but currently the price decreased at a much rapid pace than what the companies were building into their models, because they weren't expecting 20 competitors to come for this particular molecule. They were expecting 5 competitors, but the US FDA started approving ANDAs at a much rapid pace. So almost every US based player started losing money on its operation. But what I believe is that every cloud has a silver lining. And as I said, like Indian companies are still a very small part, less than 10% of the US generic business, which is huge. The opportunity size is huge. But the thing that we need to focus on is that India has a definite cost advantage in terms of a very low base cost operations. Our gross and EBITDA margins are 10 to 15% higher than what the other larger players like Teva and Mylan has. They are also the generic sellers in US, but we have a much better cost structure. So what we have seen is that in the last 5-6 years, when the cycle has gone through a downturn, the Indian players have continued to eat on the market share of these Teva and Mylan. And if you even observe the share prices of Teva and Mylan compared to what the Indian stocks are trading at, you will understand as to what I'm talking about. So the second so this point is actually working better for Indian players. The second point that worked against all the US drug generic companies was there was a significant consolidation in one parts of the supply chain. Which the supply chain which starts from the drug seller who sells from India to the consumer. There's a whole supply chain, and there was a significant consolidation in one part which is known as a pharmacy benefit managers or PBMs. So where there were multiple M&As in the last, I guess, 10, 15 years. And how this works is very complex to convey, but I would recommend you all to watch this YouTube video by Wall Street Journal with the title How Drug Prices Work. And you'll understand after watching it 3-4 times that what I'm getting at. But there was a significant consolidation in one single part of the supply chain. And we saw that there was value migration, there was profit pools that moved from the drug companies P&L to these pharmacy benefit managers who took out a lot of profit from the whole system. Because there was a consolidation. It's basic business rule. So 3 players were there in the pharmacy benefit manager space, which control now 80% of the whole supply chain. So you get an idea. They started asking for better, higher, lower prices, and that's why all the generic players in US started losing money. And as we stay at this point in time, we might never see the ROCs that we saw in the FY10 to FY15 cycle, where Indian pharmaceutical companies were making 50, 60, 70% ROCs, which we might never see, because this consolidation has already happened. This has significantly changed the structure of the whole industry and the profit pools that all these companies can make. Third, and the final issue for was not following the compliance standards that US FDA wants. So for those of you who are new to the sector, so even if you plan to sell medicines in US and you have made all the ANDA filings, you have done everything, you have invested in the medicines, you are ready with everything, then even then you won't be able to export a single container to US until and unless US FDA officials will arrive and approve your site. And this is what hit Indian players who had become lax in their last cycle. From FY15, compliances that US FDA demanded with your plants became extremely stringent on every single aspect. You know, from product quality to system accuracy, data integrity, they started pinpointing each and everything and taking it very seriously. So regulatory audits took place at any time, as opposed to earlier practices of them being planned months in advance and told to companies. So, they can make the changes beforehand. So it was found that as US FDA increased its surveillance standards, multiple big pharma companies in India were found to be non-compliant. Simple. So this led to a plethora of warning letters. What happens when you get a warning letter? Your no new product will get approved from that site again, until and unless that warning letter is cleared. And even import alerts, which is much more problematic, because you won't be exporting a single medicine to US until unless you get the import alert down. And not to forget, like, if you get on the bad side of US FDA, you are down for 4 to 5 years, because they won't come to your plant for 4 to 5 years, or even 6, 7 years, and you won't be able to do normal business until and unless you get the clean sheet. What we have recently seen in the Goa plant of Lupin, and if you study the history of that plant, they have faced multiple issues with that. So the costs of bad compliance means losing hundreds of millions of dollars of investments. And slowly, most of the Indian companies are waking up to this fact. So these are the things that happened. So back in 2015, there was this narrative that these pharmaceutical companies that sell in US are recession proof, they are very high margin, they are capital efficient. So Indian companies have a clear competitive advantage. Their regulatory standards create a moat and keep many competitors away, and so on. You know, so most of these companies were valued at peak valuations, at peak margins, just how market cycles work, and they never saw those prices again. I mean, stock prices. So it is a cyclical business, but does that mean it's a very bad investment and we shouldn't go there? For sure, no. It depends on what price one pays. The basic rule of any cyclical business is buy when no one wants to buy and sell when everyone wants to buy. Simple. you know so given the pessimistic aura roaming around the sector, I believe multiple opportunities can be found here, where the investments in capacities and filings are over. All the ANDA filings are in line because they have already done all the research, R&D expenses, everything is done. The compliance is fair enough. Just to reiterate, by fair I mean, like, they never had a warning letter or import alert in their history, but the risk of being surprised with one, even with an impeccable history, remains. So that's the risk that you take. That if there is some XYZ USFD action, adverse USFD action, then you are in big trouble. So, so you just have to look for these companies where every investment is made and the operating leverage is waiting to play out, and they are currently waiting for approvals to report the big bang numbers. And by that I mean that after COVID has hit India, US FDA has stopped visiting Indian plants. So the companies who have done all the investments, and they have to get the approvals obviously again for selling more complex products and other stuff. So they are not being able to get all these approvals. So when the when the COVID, the third wave, fourth wave, fifth wave goes away, then you will see that the US FDA comes back to India and starts visiting plants again. And then you will see if they get all the approvals. If they get all the approvals, then you will get an idea as to what their cash flows can become, because they have already shown, you can see in their balance sheet all the investments that they have done over the last 5 6 years. I'll just give you the data to prove it. So the size, the capex and R&D investments the companies focused on US did from FY15 to FY21 at times was nearly 15 to 17% of their yearly revenue. That is how much money they have already invested in the US business. And this is obviously has normalized now to 10 12% because they are not seeing a lot of cash flows for the investments that they have already made. So how will they be able to invest a lot more? So what has happened is that these companies have already filed a lot of complex generics in the US. Complex generics which are similar to copycats or generic medicines that I mentioned, but the R&D investments and scientific capability needed are a lot more. So the competition will be a lot less because not 20 or 25 players will be able to crack the medicine. So few players will be there. It's that simple. Only 4 or 5 players normally will be there for a complex generic medicine. So which means what I mean is their spends are done and dusted. The capacity increase that they need to do to cater to the market opportunity is already done. So what you need to understand here also is that the gestation period for investments in US market is long. It's very very long. It's normally 3 to 4 years for vanilla generics. So what I'm getting at is that if you are investing today in the US market and it's a vanilla generic, which are very easy to develop, so that the day you start working on it on your lab and you give it to your scientist to work, to the day you generate your first sale after getting all the approvals, it takes 3 to 4 years, and it will increase. So it takes 5 to 7 years for complex generics, which are not easy to develop, as I mentioned. And due to the same, we will face lesser competitive pressure like in vanilla generics. As I told you, very few people, very few companies will be able to crack it. So in complex generics, the competition will be a lot less. It normally includes injectables, dermatology products, respiratory products. So not even in that, it will take you 5 to 7 years. And thirdly, when it comes to biosimilars or biologics, it will take you 8 to 12 years. So the scale is different. So not going in a lot deeper here, as I will explain them a bit later. So just imagine that there are very high entry barriers when it comes to complex products. And think of it as any commodity product at the end of the day. Even though it's complex, it is a commodity because you won't be able to differentiate. As I told you, there is no branding and stuff that goes on in US market. So think of it like steel, think of it like cement business, which has already increased its capacity. The weaker players are out, and now what they are waiting for is just an upcycle. Think of it that way. And how you bet on these companies is dependent on exactly those terms. You have to time your entry and exit right. So you would say that because the investments are already done, a lot of excesses are out of the system. The companies who are not cost competitive are out of the system, and very few players have survived over the last 4 or 5 years, and they have also done investments into the field. So sometime or the other there has to be an upcycle. Has to be. That's how each and every supply demand commodity works. So what to look for in a US based pharmaceutical companies? Let's get to business. So there has to be an impeccable compliance track record. So as I've told you, the biggest risk for any pharmaceutical company that sells in the US is the closing down of their plant by US FDA if you're not following the strict guidelines set by them. So as an investor, I can't really write off this risk for any company. But what I can do is decrease the probability of an adverse reaction from the US FDA. How do I do that? Firstly, observe the history of the company, the promoter. How honest are they? And then what you have to do, firstly, check the history, see that there is no warning letter, there is no import alerts, how many OAIs are there. These are just terms to differentiate as to what big mistakes they did. Learn warning letter and import alert. and check for these two things in the company's history. Secondly, when you are investing into a sector, into the pharmaceutical subsector which focuses on the US pharma market, always go for a basket approach, because even though the history might be impeccable, there is always a risk that US FDA will come and close your plant down, and you can't really tell. So it's better to always hedge this risk by going in for a basket approach. And in an upcycle, each and every company will do well. That works for almost every commodity, but there are some intricacies related to this business, which I'll get to now. So also you can look for is integrated pharmaceutical players in US. And by integrated, I mean it's very tough to get integrated. How do you get integrated? So there is API. API is the raw material which goes into making the final product in pharmacy, in the final medicine. It's a raw material. Just imagine it in that sort of way. At this point in time, I'll go deeper and I'll explain what it is in much detail later. So you have to get the API, you have to make the API, you have to develop the API, then you have to get the compliance of the API. You have to get the API approved. Then you get the formulation, the final medicine. Then you get the compliance of the formulation, get all your plants approved. And then you also have to maintain the supply chain efficiency so that you want to make profits. So only 5 companies in India have 70% plus gross margins consistently in the last 5 years. So look for gross margins these companies make. Gross margins is one of the best indicators that will be helpful to you in when you're judging a pharmaceutical company. So if they are integrated, they will be the least cost producer. And in a commodity business, that's what makes all the difference, because there is little to no technological differentiation at the end of the day, other than if they have like very complex generics. But most of the times there will be little technological differentiation. So cost advantage is that matters, because slowly and steadily you will become the market leader. As the players who will continue to lose money, they will get out, and sooner rather than later, you or like very few players will stay to sell that molecule, and then you can increase your prices. And some pharma companies in India have actually gotten the benefit of it, and they have made humongous profits. For example, study Alembic, like they got the benefit of customers leaving from the statins business, and there was a supply shortage due to which the prices went up like anything, and they made bumper profits. And it has been happening with most of the pharmaceutical companies in India. So what is currently happening is there has been huge raw material price increases across the supply chain of pharmaceutical companies. And the ones who are the most integrated and have the highest gross margins will eat the market share of others. For those of you who don't know what gross margin is, so basically, if I'm selling a product at 100 rupees, my gross margin is 70% if I'm making that product for 30 rupees. So if I'm selling a product at 100 rupees and I'm making that product for 30 rupees, and another player is making that product for 50 rupees, then I have a 20% advantage compared to the other product. And when that person, compared to the other person, and when that person will start losing money, even at that point in time, it will be very much profitable for me. So that's how the companies who have cost advantages, they continue to gain market share, because when the cycle goes through a downturn, the smaller and weaker players go out of the system because they continue to lose money, and sooner rather than later they are deleted. And so look for higher gross margins. So there will be a short term hit at this point in time for almost every pharmaceutical company out there. But if you are able to grasp as to which companies will be able to increase their prices and gain market share in this period over the next few quarters, then you can make good amount of money over the next 2 years. So the third thing that I look for in a US based pharmaceutical company is their pipeline, which means what are the next leg of molecules that they're going to launch. As I've told you, they have already made, most of the companies have already made investments, but then I have to judge as to where they made investments. Have they made investments in vanilla generics where the competition will be huge and the business will be too volatile for me to make any money? Or have they made business investments in extremely complex generics where competition will be very less? What's the opportunity market for them, like for their medicines? What's the opportunity market like? Are they targeting $10 billion worth of molecules, or are they targeting $50 billion worth of molecules which are going off patent? And what competition can they face? And that is solely dependent on how many companies will be able to crack that molecule, which is dependent on, is that particular molecule very complex? Is it, if it's very complex, then few will be able to crack it. So it's better for me as a investor into that company. So one way you can judge this is how much R&D spending that they did in the last 5-10 years. Because, as I've told you, the gestation period of this business is huge. If you're investing in a complex generics, if you're investing in a para 4 or biosimilar, it usually takes 5 to 10 years to show in your P&L today. So go into FY15, go into FY16, go into FY17 annual report and study how much R&D spent they did at that point in time, and where were they spending it. So here you will observe that only a few promoters have the capacity to suffer for this longer period, because I'm investing my money today, but I won't see the cash flows till FY27, FY29. Just imagine the amount of like patience that you need to have. How many investors do have such amount of patience? Very, very few. Very, very exceptional people do have such a long patience. you know so what were the, look in their FY10, FY15 annual reports from FY10 to FY15 and see what a future were they talking about. Were they talking about 2 to 3 years down the line? Were they talking about 5-10 years down the line? And also, this is a business which is very capital intensive, so we should also check where this R&D funding and capex funding is coming from. If it's majorly from debt and not from internal accruals, then basically the promoter is betting their whole company on in this business, because this business is not like the Indian business where the cash flows will be very stable and everything will work really fine and then you'll be able to pay your debt. It's not like getting a salary, so that's why the people will give you a home loan, because your salary is so stable. This is like running a business where your cash flows will be very volatile. So if a promoter is betting their whole company by taking that and putting it into R&D, which is very volatile, and you can't really expect, sometimes there is no returns for hundreds of crores of money spent in R&D. So these are the factors that you need to look. Balance sheet is very much important in this business, as in every business. So that is something that you need to look at. Balance sheet should always be sacred, and the promoters should always talk about how they are protecting their balance sheet and not taking a lot of debt. There's a lot of pharmaceutical companies have taken a lot of debt in the last 10 years and they haven't created any wealth. So the future belongs to complex generics and biosimilars. Why do I say so? Because in the next 4 or 5 years, there is like $21 billion worth of patented molecules, which are complex generics, which are going off patent. And biosimilars, there are $60 billion worth of biologics, which are going to go off patent. And biosimilars can enter this business. I'll go deeper into what are biosimilars and biologics now. So what are biologics? So, while a normal drugs that we talk about, like paracetamol, can be made from normal chemical reactions. I mix this chemical, I mix that chemical, and you do some chemical reactions by adding a catalyst, and you will get a paracetamol. Biosimilars are drugs that are made inside living organisms. So just imagine how incredibly complex are they. And they are normally humongous in size. They are also known as large molecules. Like an average chemical molecule would have 200 to 500 atoms. A biologics would have nearly 20,000 to 50,000 atoms. They are huge in size compared to what the normal drugs are. Additionally, why are we interested? Because biologics is something which is huge, which is a huge market at the end of the day. As I've told you, $60 billion worth of biologics are going to lose their exclusivity, which is basically going off patent in the next 5 years. So opportunity size, just imagine, even if there's a 50% price correction, just imagine the opportunity size that the generic players can enter and tap. So biologics also account for 46% of the US pharmaceutical market. The whole market, which is doing 800 to 900 billion dollars yearly, 46% of the market comes from biologics, and six of the top 10 drugs selling in the US, uh, earnings billions of dollars in a single year, are biologics. So going forward, what we see is that more and more drugs are synthesized using living organisms, and the biologics are the preferred way because they work a lot better on humans, is what we have seen. The global prescription sales of biotech products is going to grow at 2x the rate of what it is growing for the small molecules or the conventional or the chemical products, for example, paracetamol and others. So, what are biosimilars? These are the things that we are really interested in, because that's where the Indian company's focus is on. Biologic is the innovator side. Like, you do the innovation, you invent or discover a new drug, and you get exclusivity for it. But when the exclusivity ends, biosimilars enter. Biosimilars are the generic versions of biologics, and they work exactly the same. What exactly happens when you take a generic version of a small molecule or a chemical molecule? It works exactly the same when it comes to biosimilar, but one thing is different: the chemical structure is a bit different. For example, if you are taking a paracetamol sold by IPCA, GSK, or Cipla, the chemical structure, the atoms that it has at this point and that point, will be exactly the same. But when you're talking about biosimilars, the chemical structures will be extremely different. If you're taking a biosimilar made by Abbey, and if you're taking a biosimilar made by Biocon, the chemical structure will be different, but it will work the same. Uh, I don't have a PhD in medicine, so I won't be able to explain it to you. But yes, it works. And so this is why regulators are wary of like approving biosimilars. The way the biosimilars are sold is a bit different than what the normal chemical drugs are sold in US. Like, as I told you, there is no brands and stuff, but in biosimilars it is very much similar to what is happening in India. And why do I say so? It is very similar to branded generics which are sold in India, where you need a doctor's prescription to buy it from the pharmacy. A pharmacist cannot interchange the biologic with the biosimilar, and that's a big problem. They can't substitute the biologic with the biosimilar, which they were able to do when it comes to the normal drugs. And so if even if it is a much cheaper medicine, so if a biologic is selling at 100 rupees and I have a biosimilar which works exactly the same at 40 rupees, they won't be able to substitute it. And that's where we have seen that companies like Biocon, which are working with Milo and its partner, have struggled to scale up their market share, as it takes a sufficient amount of time to create mind share in the doctor's mind. As I've told you, in India, the
Anish,
yes, yes, please.
I've got a couple of questions saying that the differentiation between biologics and biosimilars is still not clear. Could you
Okay.
please repeat that section?
Yeah, I'll do that. I'll do that. So, as I told you, for example, if I have a chemical drug ABC, and and that chemical drug has lost its exclusivity at this point in time, so then generics will enter the market, as I've already told you, and those generics will have exactly the same chemical structure. They will look exactly the same if you go and look it into a ultra microscope. They will look exactly the same. But when it comes to biosimilars, they work exactly the same as the biologic, which is the innovator. But the chemical structure is very much different. For example, imagine a seed. So a seed, two seed come from a single company. For example, I buy two seeds from Syngenta, and I plant both of the seeds at the same time. I gave them all the water and the sunlight at the same time. They are exactly at the same location, but the trees that will come up from those seeds will be very much different. And that's what, so the trees work exactly the same. They give out oxygen, but then they look different, no? And that's what is a biosimilar. They work exactly the same as the biologic, but they look different. That's why the regulator is a bit wary, and they are not really sure. You have to do additional studies to prove that your biosimilar is interchangeable with your biologic. As I have told you, when it comes to chemical drugs, I go to a pharmacy in US, and my doctor has written paracetamol. I will get the cheapest paracetamol out there. In biosimilar and biologic, if my doctor has written a biologic's name, I won't be able to get the biosimilar of it, because the doctor has to write the biosimilar name before the pharmacist is able to interchange it. And that's why it is very similar to a business, very very similar to how the business is done in India. Yes, Krishna.
Uh, Anish, can I ask you another question?
Please,
Just
please.
a clarificatory one.
Yes.
So you said that biologics are just biosimilars are the generic versions of biologics, but they have a different chemical structure. You also mentioned that biologics are live, living sort of biological elements. Are biosimilars also live biological elements, or are they different?
Yeah, good question, Krishna. So at
In
the
the
end of the
sense,
day,
in
yes, I go ahead. Yeah, yeah.
in the
So
sense, are they
yeah,
synthetic?
please. Yeah, so they are normal. They are like normal drugs. They are not living creatures. They are just made inside living creatures. That's why it is incredibly complex to make them. So if I change, so it's a very complex procedure. It's like thousands of steps go into making a biologic and a biosimilar. If you change if you change the temperature in just a single step, the final product will be very much different than what you need. So that's why they will look the different. They will look a bit different, but at the end of the day, they work exactly the same. But they are synthetic. They are not living creatures. At the end of the day, they are made inside living creatures.
Both of them.
Yeah, both of them, biologic and biosimilar. It's just that the biosimilar, if you make it, it will have a different chemical structure, but it will work exactly the same. And
And
why do people are going for? Yes.
yeah, and biosimilars are also made inside living organisms.
Yes. It's just that because your cell line will
Okay.
be different, you have developed it on your own. It will look different, but it will do exactly the same work. But because they look different, then as I told you, the regulator is not really sure as to the long-term complications or medium-term complications resulting from them looking different, and that's why you have to do additional studies to prove that you are interchangeable, that you can directly be interchangeable at the pharmacist end, which is not exactly the case at this point in time. And for normal medicines, the pharmacist will give you the cheapest paracetamol. He will not give you the brand. But in biologic and biosimilar, you will get the brand that the doctor has prescribed. Is it clear, Krishna?
Yeah, yeah, absolutely. I had one last question about this, and
Please,
then we can
please.
continue. Um, so you spoke about how biosimilars have a different chemical structure. Is the whole reason behind creating this different chemical structure because the original way of creating the biologic is still patented?
Yes, so even if you tried to create it and you will try to create the cell line that the original one made, you won't be able to do. It's just so complex to do, like no one can achieve it. What you can achieve is that it works the same. You can't really achieve the exact same chemical structure, is what we have seen. I think that is it. But at the end of the day, there is a lot more chemical complexities when you deal with it. So it's just not copyable. Even though it is patented, even if the company which is making the biologic tries this from scratch, even though they have all the data for the final biologic, they will be only be able to create a biosimilar. They won't be able to exactly copy the biologic.
Thank you. That was perfect.
Okay.
I
So I'll
have
move
one
forward.
question, Anish.
Yes, please.
Sorry, they use
Yes.
a lot of analytics, right, for identifying the similarities between these two. So that was the starting point. And today, a lot of people are working on reverse engineering to figure out, how to actually crack the code for all these. So, are you aware of the technology changes, or are you looking more from biosimilars? Because, from what I am reading, it sounds exciting. I don't know how much is going to happen, but yeah. So, see, very recently, there was one breakthrough on AlphaFold 2, which where they were able to actually predict the DNA, creation of a DNA, or the sequences that make a DNA. So will that actually accelerate, the creation of biologics or biosimilars? Could that happen? Thank you.
Yes, Deepak, you are right that they are trying to exactly copy. the biologic, and there is a term also for it. It's a biogenerics, but it is actually at a very initial stage. The research is going on the digital and analytic side. Yes, this is something that each and every one is working on. Each and every large pharmaceutical innovator player is working on. Even we see that CDMO companies like Syngene is providing that service to these companies, and that is helping them choose so when you are trying to find a new drug, you have 10,000, 1 lakh options. From that, if you use AI and if you use all the latest digital technologies, the process becomes a lot faster in choosing the final drug. When you're doing the innovation, it's primarily on the innovation side, and CDMOs like Syngene and even Piramal Pharma are providing those services to their clients. And yeah, hopefully that will lead to more biologics, more small molecule innovations, and we'll see a lot more new drugs over the next 10, 15 years. So I'll move on with my presentation.
Thank you.
Yeah. Yes. So because what we see, as I've told you, it's very tough to become a brand in India, and that's what is happening with biologics in US. So Mylan and Biocon, for example, we have that example only in India on the listed space. So they are trying to create a brand or mind share with the doctors in US, but it is taking time. It will take time until unless there are some latest US latest policies that come into place, and we'll talk about it. But as much as I see it, this is changing for the better. Even when you talk about affordability of medicines, biologics are extremely expensive. And if you see what all the governments in various US states are talking about, they want to push biosimilars, and they want the doctors to go and write biosimilars on prescriptions over biologics, and they are bringing up a lot more incentives and initiatives to do that. Obviously it will go at a slow pace, but overall the market share is cropping up, albeit at a slower pace than what we had expected. So obviously there is a very high entry barrier in developing a biosimilar. As I've told you, hundred thousands of process, cell line creation, cultivation and production, isolation and purification, and a lot of other processes. So even if the temperature or humidity in one process is different from what you're targeting, the end product will be totally different and of no use to you. So very, very few players will be able to crack it. And that too, not just cracking it with respect to the level of compliance that US FDA and the regulated regulators expect. Like, for example, Japan regulator or UK regulator. These regulators expect very stringent compliance standards that you need to maintain. And very few players will be able to crack it, whether be it from India, whether be it from abroad, anywhere. And obviously, because it's very tough to enter, the entry barrier is high. The pricing pressure that we have seen is a bit less compared to the normal normal plain vanilla and complex generics on the small molecule side. So there you can see 80-90% pricing, the pricing 80-90% correction in pricing once the competitors enter. Here we normally see 40 to 60% price corrections. Another thing that has gained traction recently, as this is what I was getting at, is the interchangeability status. So what does that mean? So once a biosimilar from a company gets an interchangeability status on their biosimilar, they will be they will be allowed to interchange at the pharmacist level. So the problem that I was talking initially, that the pharmacist can't do anything, even if the biosimilar is like 40-50% cheaper, this goes away. And what we've seen, that the first interchangeability status is given to Biocon of India, where they have gotten the interchangeability status for their insulin glargine, which is a $2 billion drug. And so that will help the adoption of biosimilar glargine, which is sold by Biocon at a much faster rate. Previously, they were facing a lot of trouble to increase their market share. It's all about gaining more market share by giving a cheaper price. And previously, they were facing a problem. Now, because they have the interchangeability status, you will see that over the next few quarters, the market share of Biocon's glargine will go up at a much rapid pace. And this is not that any company can come with their biosimilars and then also get the interchangeability status. You have to spend again more millions of dollars to do more additional studies, and then only the US FDA will approve your interchangeability status. And normally, what you've seen is that insulin glargine that the Biocon has gotten the interchangeability status for is a lot more simpler product compared to what other biosimilars that Biocon has or other players have. It is a very old product, insulin. It's a 1970 product, which was in 1970 it was introduced. So you get it. It's a very old product. It's a small molecule. It is a smaller version of the normal biologics that go in this place. So the structure of the industry is not going to change overnight, is what I'm getting at. So to summarize, I am positive about the prospects of this subsector, but it is not going to change over the next few years. It's mostly a decadal play or more, because even though there is a patent cliff that we are going to see, as I've told you, $60 billion worth of biologics are going to go off patent, and we will see a lot more biosimilars enter the market. To gain market share for biosimilars, it's not really easy at this point in time. So if you are betting on any company related to this sector, you will be betting on the company's ability to come up with new biosimilars in the next leg of biologic cycle. So in the next 5 years, there will be $60 billion worth of biologics that will go off patent. From FY26 to FY30, there will be another 50, 60, 30, $70 billion worth of biologics that will go off patent. So you're betting on the company's ability to innovate and bring out new molecules in the next cycle. And hopefully by then, the policy changes and US FDA will be much more helpful to these companies in gaining a lot more market share, so that it makes sense for them to invest. So you're betting on a much longer time frame. So this is something on, I guess someone asked me on the Biocon prospective deal of biosimilars that was released today. There are talks that Biocon will acquire the biosimilar business of Mylan and then create a huge biosimilar entity which will have a huge portfolio, because Mylan has also some very big molecules in his pipeline. So we will be doing a Twitter space or a clubhouse session on the day the details of this deal is announced. At this point in time, we have very little information, and I won't be able to comment anything on that. So next, before I move on to everyone's favorite API and cramps, so let us just summarize as to what we have learned till now from an investor's point of view, because that's what matters. In Indian pharmaceuticals, one just has to time the buying right. And that is basically not paying extreme valuations. And then one can sit on it for long periods of time, as it will continue to compound for decades on end. This market is continuing to grow. It's a very small market at this point in time. 1.5 lakh crores is nothing. It can go to 10 lakh crores. And it will do that at a very steady pace, structural story. In US pharmaceuticals, one has to time the entry when you have to enter when no one wants to buy it. Basically, when the US market will make a lot more losses, and the investments for the next leg of launches is already over. And you're waiting for the operating leverage to play out now. And you have to exit then. You have to exit when the margins reach all-time highs, 30-35% margins. And everyone around you is rushing to buy that stock. We sell because this business at the end of the day is a commodity, and it will go through its cycles. Still, there will be some exceptional promoters, who will continue to create wealth. So if you can recognize them and bear the volatility that comes with owning such stocks, because commodity, so it could do wonders for your portfolio, is what we have seen. So coming on to API and cramps. So to
Anish,
explain, yes,
one quick question, Saket
yes,
this
please.
side.
Hi,
So
sir.
Anish, any thoughts on say NCE play that some Indian players are embarking, especially in US, say the likes of Sun Pharma, or even others are trying to say buy out a few assets in the initial stage. So do you think that could be a growth driver? Because I understand that biosimilar is going to be difficult, because even the innovators are now investing in biosimilars, right? So,
Yes.
so any thoughts on that NC play by Indian players? Like Tildra is one molecule from Sun, right? It's and they have done reasonably a reasonable job. So, any thoughts or any analysis that you may have done on that space?
Yeah, that's a great question, Sakit. So what we have seen is that we talk about corruption in Indian businesses, Indian regulators. I think there is a lot of corruption in US regulators also, in US FDA. So, if you are a US FDA regulator, so Pfizer will tell you that once you leave this position, I will pay you 10x your salary, and I'll give you a board position in my basically in my home. So these basically US innovator companies, they would never want the Indian innovator type of thing to happen in India or anywhere else compared to what they are doing currently. And that is why this part of Indian business has never really picked up. If you see, there has been a lot of, I would say, visionary promoters who even started doing this in 2000, and you can see the stock prices today, and you will see that nothing really has happened, because at the end of the day, they would come and buy out these drugs at max. And I think what this is something that we can see with a subsidiary of Alembic, which did a deal recently. So this is something I am of a view that the US big pharma will never allow Indian companies to become the innovation hub.
Hi, Anish, sorry to interrupt you.
Yes.
I work in the pharma industry, and it's very wrong to mention that US FDA and US companies are able to bribe or say that they won't allow Indian companies to enter into the US market. It is a highly regulated market. I've been in this industry for last 15 years. So be careful when you choose these words like MNCs, US companies cannot allow Indian companies to work in US registrations or enter into the US market.
Yeah, I think I chose my words wrong, but what I was getting at is because of a lot of things and a lot of the numbers that we
No,
see in the real market over the last 20 years, the investments have never really cropped and never really given any benefits to Indian promoters, even though they have given it a lot of investments and a lot of scientific capability behind it.
there has been a lot of reasons beyond it. So, yeah,
Yeah,
No,
please
for
I'll
sure.
proceed.
give you an example
So thank
actually.
you, for building that up.
Yeah, I'll
I get
just
to.
take 1 minute.
Yes.
Recently Amgen has actually released a medicine, and now it's going through investigation. Because one of the directors in US FDA actually, insisted on providing approval for one medicine, where that is a new drug, that is again biologics itself. And now there is an investigation happening on that US FDA officer actually. So, we don't know how many such things happen. This actually came to my notice, and that is
Yeah.
why I'm
So Deepak bhai, I think it's a gray area. So let's move on. Maybe Anish, we can touch base offline
let's
on
move
this. Yeah,
forward.
but thanks. Yeah, appreciate your response, bro. Yeah.
Yeah, it's extremely gray area, and to tell you
Yeah.
what is exactly going on, we would require a lot of people who are
No,
working
I
inside
get
in
it. I
this
get it.
industry,
Yeah. Let's
and
move
I
to
get
the
a very
API.
upper view. So that's what we have gotten from it, and we can always learn a lot more and build our thesis a lot better. Because at the end, if there are some better pointers, we can always build it into our thesis. Secondly, on the APIs and CRAMS, so I'll explain you what an API is. So before that, so as I mentioned earlier about my love for instant black coffee. 1 second, someone is on mute. Sameep, could you please unmute yourself?
Yes, Samit,
Yeah.
Samit is muted now.
Yeah, thank you, Prash. So, as I've already shared my love for instant black coffee, so what is the prime ingredient in my black coffee? It's the coffee powder. So, can I take it as in the powder form? No. I need to add hot water to it for it to be a consumable to me. So now, in any drug, API is the active substance that does the heavy lifting. Here is the coffee powder, but it needs to be mixed with an inactive substance, which is the hot water, which doesn't do much to me, but I am addicted to coffee. So that is what needs to be delivered inside me. This active substance API will be mixed with an inactive substance, and it will be delivered to the patient, which is me. So the final black coffee is what is the formulation, which is made by the formulator, which is a normal pharmaceutical company, the companies that we have discussed till now. So APIs, also known as bulk drugs, are a $180 billion industry globally, of which India has 7% market share, with a market of approximately $14 billion, where 10 billion is sold in India, which is a normal structural story growth rate of 10%, and the rest 4 billion is exported, which has a potential to grow at a much faster rate, and there will be our focus. on. Dev is there is where we'll be focusing on. So 50% of which is exported is to regulated markets, and other 50% is to unregulated markets. So 2 billion in regulated markets, 2 billion in unregulated markets. The opportunity of the Indian API companies is taking away market share in exports. Other than India, two other major players are big on a global level when it comes to APIs, which is Italy and China. They are one of the biggest exporters when it comes to API. However, what we have observed in the last 3 to 4 years is that due to quality concerns of US FDA and environmental concerns of the Chinese government, so US FDA has quality concerns about the APIs that are coming from China, and there have been a lot of US FDA adverse actions in API companies from China. And also the Chinese government, as we have heard with the chemical industry, the what a rally that industry has seen. And that is solely because of the environmental concerns, uh, leading to closing down of Chinese chemical plants. And now it has also been seen that it is happening in the API industry. In the last 3 years, I have heard that 300 plants have already closed down in China due to environmental concerns. And I'm talking about API plants. So hundreds of 200, 300 have already been closed, and 200, 300 are in line to be closed because they don't follow all the rules. This in turn, with the supply disruptions during the first few quarters of COVID, which even affected Italy to a very large extent, as anyone who has been reading news would know what is happening in Italy, what happened in Italy at the time, brought the focus of the global formulators, who are the ones who are procuring a lot of APIs from all the countries over the world, to India. They started focusing on India, which was able to maintain its supply chain compared when it is compared to other players across the world, where they faced a lot of uncertainty when the first wave of COVID hit in China and in Italy. They are thinking, they have started to think about de-risking their supply chain, and that's why they would. That's where the whole story of China plus one or Europe plus one is coming from. You know, while they were previously buying 100% of their supplies from China or Italy or Italy, now they are preferring to have India as a secondary source for their API needs. This is something that you might have noticed when many companies of the sector, the API sector in India, have started investing a lot of money into Capex and FY21 start. And if you study the whole 10-year history of those companies and the amount of money that they have invested into their business, this is substantial. If you'll check, I think SOIC has written a good thread on it also recently. You can check it out. So while they were, so just to reiterate, API companies, and that too in regulated markets, is the biggest opportunity of growth that we observe over the next 4 or 5 years. And let me tell you some numbers that support my thesis here. So just like ANDAs are something that you have to file to sell a final medicine or formulation in US, you have to file a DMF to sell a API to formulators that will finally sell the medicines in US. So as I've told you, API also needs to get approval from US FDA to then be sold to the formulator, who will make the final formulation that will be sold to US market. India has 46% of all US DMFs approved by region, and this has grown rapidly in the last 5 years. Also, the point to note is that Indian API manufacturers win against China in terms of quality. As I mentioned earlier of the environmental crackdown, uh, as I mentioned earlier, also benefiting from the environmental crackdown that the China is happening, and also due to the environmental crackdown that the China is seeing, the Chinese API players are seeing an increased cost structure, which are making Indian API players more competitive in terms of cost at this point in time. Other than this, Indian API players win over Italian players with respect to the costs. We have a much leaner cost structure, which will be very much visible to you with respect to what the labor costs in India versus compared to what it is in Europe or in Italy. So it's sort of a win-win situation that is turning out to be, and that is what India has demonstrated in the past, where they have even become global market leaders in some high volume APIs like paracetamol, ibuprofen. So that is what we are seeing in many of the high value, low volume APIs playing going forward. as our chemical capabilities are second to none. So the global MNCs have started noticing this, and thus long-term contracts are expected to continue to follow up. And this is what you call is China plus one. More and more contracts, long-term contracts, are going to come to India over the next few years, and we have already seen some green shoots in the numbers that Indian API companies and in the projections that they are forecasting. Second big opportunity is that of import substitution. We import nearly $3.5 billion of Chinese APIs, which our Indian API manufacturers are looking to challenge now, given they have some of them have done a lot of process improvements, which have decreased the costs of what they incur to make these APIs, and now they are much more competitive with respect to the Chinese API players. Even the government knows of this, and thus they are incentivizing API companies big time with huge PLI schemes and other subsidies to make them more competitive to these Chinese peers or Italian peers in terms of pricing. So all of these tailwinds are playing out, and it is slowly and steadily being visible in the numbers of the majority of Indian API players. And they have shown it in their gross margins. One of the best indicators to track, one of the very important KPI, will show that how these companies are moving up their value chain. If you see the chemical industry over the last 5 years, you will see a consistent increase in the gross margins, which shows that these companies have continuously increased the position of themselves in the value chain, and now they are focusing more on much more lucrative products, and that is where we see that the Indian API players are going towards. The second important factor that you need to look is the Capex and R&D investments. As I've told you, these companies are undertaking uh, huge Capex, which we have never seen in the last 10 years of their history. We have to remember that the molecules one company makes is at times very much different from what other makes. There are like 5,000 to 10,000 options that you can go for. So overcapacity, which is faced by a commodity industries like steel, cement, is rarely possible here, because even if you set up a plant for a single API and that API faces huge supply in the global market, then you can usually use that plant for different APIs. So the plants are basically fungible, and in a time of few quarters, you can transfer from one API to other APIs if you have already developed it. Which we see that a lot of Indian players already have a good amount of portfolio of products which they can sell to global MNCs innovators. Third, and the most important thing that you need to look for, is the vision of the promoter, and what scientific capabilities have they built in the past 5 7 years. Do they have consistently demonstrated the ability to handle new chemistries and also successfully increase yields through process chemistry, basically trying to become the lowest cost producer globally in their respective APIs. And over time, as I've told you, if you are the lowest cost producer in a down cycle, you will continually increase your market share to such extent that you will slowly dominate the whole market. And for example, that's the strategy of the king of Indian APIs, for example, DV's laboratories. And that is the direction we are seeing even Lotus Labs going with respect to what the promoter is betting on. However, not to forget that in the next 2 3 quarters, the times will be very tough. As raw material prices have shot up through the roof, which includes KSM intermediate solvents, which are basically raw materials that go into making APIs. They have gone to irrational highs. If you talk to any promoter, he'll talk about prices going up 100, 200, 300%. This will lead to a sharp drop in margins, which we have seen in the last quarter also for some API companies. This mixed with a weak formulation market, which we see in the US, that is playing out, where they are exporting majority of their APIs too. This doesn't bode well for these API companies for the next few quarters. So, the higher value players, higher value API players, which have a much higher gross margin, will be able to pass on the increased raw material prices at a much faster pace. So that is something that you will be seeing over the next few quarters. And I think it's a good time to invest in this particular sector, given the strong growth visibility, at least in the next 2 to 3 years, with respect to the investments they have made. Secondly, coming on to the CRAMS, business, which I would say is the simplest among them all. So CRAMS means contract research and manufacturing, also called thekedari in India, where innovator companies across the world outsource their R&D. What do I mean by that? They will rather not invest in their R&D centers and would rather transfer the rigorous work that you need to do. Choosing one molecule from thousands of molecules and then going through all the clinical trials, and then finally getting all the approvals. This whole process, they would rather not invest in their permanent fixed capacity, and they would rather transfer it and make it a variable cost to them, so that they are able to be very agile with this cost structure. And that's what we are seeing, where specifically players from India and China have continued to gain market share over the last 5 years. And what we see is that, and the amount of wins, the amount of clients that are being added, and the wallet share that is being increased by the Indian CDMO players, we see that this trend has just accelerated. Why? Because Indian and Chinese scientists are normally 5 to 10x cheaper to hire compared to what it is in Western economy. So that is one of the biggest cost. It's basically like an IT business. You track the number of employees. In this business, you track the number of scientists that the company has. This market is expected to grow at higher double digits for not many years, but decades to come. As pharma companies increase the percentage of outsourcing of R&D, as I've told you, it works for them. It becomes the R&D becomes a variable cost to them compared to a fixed cost. And slowly and steadily, they are thinking about this. Currently, also, this percentage is low and it can go to a much higher level. Obviously, not all innovator pharmaceutical companies will go this way, but we are seeing that the trend is accelerating and more are going this way. And obviously, you get the agility to expand one's base as per their wish is much better in this business. It works for them somehow or the other. They save a lot of money, and this longevity and visibility of growth is the reason why the companies who have proven their worth in this particular field, CDMOs, will continue to get premium valuations. So, what are the things to keep in mind when choosing the companies to bet on? When it comes to CDMOs. So the company should have a very good innovator base of customers and check whether they supply the products for on patent molecules or not. Many companies, I think someone asked also, many companies say that there are CDMO in India while they are only a CMO at best, because they are meaning they don't have the strong scientific capabilities that they boast of, and but are in more in the generic medicine side or in the end of life cycle CDMO, by which I mean that when the molecule goes out of patent, and then only they make the raw materials, APIs, or the final formulation for the innovator. So they are not in the main innovation side of the business, where the gross margins are pretty lucrative. If you check the gross margins of the CDMO business in India, they usually make a very high 70 to 75% gross margins. So just imagine if you are a player like a Syngene or a Suvin, then you get 10-year, 15-year contracts at 30% EBITDA margins. And in this, I'm not even adding an optionality, which I will talk about later. So, and you second thing that you need to look for is, do they have new technologies? Are they able to provide biotech CDMO? This is something that they can use to differentiate and scale up. As I mentioned earlier about this mega trend of biologics, more and more biologics are going to be approved going forward because they are just better medicines. It's that simple. So it's a multi-billion-dollar opportunity that global innovators are very keen to tap, and should continue to track the number of scientists that these companies have hired, like we track the number of employees in an IT company, as I've talked. And if the attrition is stable, normally it is, the optionality that I was talking about, it's a beauty about this business. So for a CDMO player to scale up, how will it do it? Then imagine if you have developed a molecule with an innovator, and even if that molecule fails to get the approvals by US FDA, you earn money for the service you did and at a very high margin. However, if yes,
Anish, can I ask a question at this point?
yeah,
Because
please.
there's a region called Flanders in Belgium.
Satisha, we'll take Q&A after the presentation is over.
It's not a Q&A, basically, yeah. Because it was just a information. But maybe
Just
Anish will
just
have
an
more
just
information.
Yeah,
to
please go
yeah.
ahead. Please go ahead. Yeah.
Yeah, there's a
Yes,
region by
yes,
name
Satish.
Flanders in Belgium. So
Okay.
they have a similar model like what you're talking about. There's a cluster
Hmm.
of many R&D companies and startups who provide services to major pharma sectors and provide R&D as well as manufacturing service. How do you see whatever you're talking about on those lines in India shaping up?
Yes, as I mentioned, so US and Europe are already very big when it comes to providing these CDMO services, and that is what we are seeing over the last 5-10 years. If you observe, the CDMO business in India was negligible at one point in time. Yes, the CDMO business in India was negligible if you look at 15 years behind. But slowly and steadily, the India has starting to gain a lot more these of innovator customers, as and when these innovator customers also are gaining more trust of the Indian players. Is we are building our trust with time, and we are seeing, because we provide the same service at a much lower cost than what a Belgium player or what a European player, other countries in Europe player and US player would do. We would do it at a much lower cost. And slowly and steadily, we are also building the scientific capabilities for it. We are able to provide the biologic services. We are able to provide all the AI based analytic services. Obviously, China is a bit ahead of us in terms of biologics, but both of us, the whole Asia CDMO business is gaining a lot more business, and that what we see. The trend will continue to accelerate with time because of the cost advantage. I hope it's clear, Satish.
Yeah, yeah. Thank you, Anish. Thanks.
Okay. So as I've told you, so we will. I was talking about is the optionality that this business has. So I talked about, like, if you developed a molecule and it wasn't able to get all the approvals, even then you make all the money, and after that you will continue to work for that customer in different molecules. So that business stays. But if a molecule that you worked with the customer gets all the approvals, and becomes a big drug in the world, so you will be the one who will be manufacturing it for its lifetime, at least for the first 8 to 12 years of exclusivity that the new drug would definitely have, as I have talked earlier. Imagine if it becomes $1 billion drug. You can make hundreds of millions of dollars for 10 years straight, as you will be manufacturing it, and that too at a very high margin. Like, see the CDMO players who are doing a lot of manufacturing from India. Like, Syngene is recently going into manufacturing at large scale, but if you see at Suven, if you see Divi's Labs, see the margins that they make in the manufacturing side of business, 50-60% EBITDA margins. So if this drug is a biologic, then the stickiness is amazing. As I've talked to you, the transferring of the cell line from one plant to another is extremely tough. So there could be a case that you might be the sole manufacturer for that biologic, and if you are able to crack it, and then 10 years of very strong cash flows, and this could basically be as much high as what you make in a single year at this point in time. So this is a big optionality. Fourth thing that you need to check is how much dependent are they on China for the raw materials that go into their products. It is majorly dependent. It is major. This problem is majorly faced by the API players as a whole, and less on the CDMO side, because I have told you they are able to pass on all these costs at a much rapid pace. So for APIs, do check these things. How much percentage of the raw material comes from China? Because China has been notorious in the past in increasing the raw material prices. As we have seen recently, what has happened in China is the power costs went up at a rapid pace. They were not able to produce electricity at the pace that was required by the industries, due to which there was a supply shortage, and all the prices shot up 100, 200% for solvents, for intermediates that go into making all these APIs. And all these API companies are facing a problem. So this is something that how much dependent on they are on China matters a lot. I think managements do clear this in the con calls. Everyone asks them this question, so you will be able to easily find it. So the risk that I see is in the CDMO business, is that it's a highly capital intensive nature of business. Obviously, you make a good return on it when the business comes online, but the gestation that is required, for example, Syngene is investing in a manufacturing plant, and it will take it approximately 8 years from the day it thought of investing in the plant to the day it will generate a significant amount of sales from that plant. So you get an idea. The gestation period is extremely long. But obviously, the operating leverage can play out a lot better. For example, we have seen that Lonza, one of the largest CDMO players in the world, have increased its EBITDA margins by 500 to 700 basis points once the operating leverage of their investments started playing out. So manufacturing business is capital intensive, so you have to check if the promoter if you have to check the balance sheet strength for the promoter to invest so much money into that business. Other than that, once it's done, then you make a lot of money. So that is something, that is when you can position yourself. If you get a good valuation, then you can seriously get a run for your money. So because of the limited players in this space that will continue to increase their capabilities, which we see in the case of Piramal Pharma, which we see in the case of Syngene, which we see in the case of DV's laboratories, and the strong tailwinds that entail uh, this industry. We see that this industry is going to have a run of its lifetime for the next many years, and that's why this is a segment we are a bit most bullish on. So I would now end my little speech, but if you want me to do another clubhouse on diagnostic companies, hospitals, consumables, and industrial goods related to the pharmaceutical industry, do let me know on Twitter, or also let me know if you liked this session and how I can improve it the next time. So just ending with this quote from Michael Porter. So it's incredibly arrogant for a company to believe that it can deliver the same sort of product that its rivals do and actually do better for very long. So I'll just end it here and we can move on to Q&A. Thank you.
You wanted
I think
feedback, and it is excellent.
yeah, I don't know, Anish. I don't think in the last time
Yes.
we've done a sector specific presentation that has generated so much positive messaging. So just wanted to let you know that it's quite crazy,
Thank you so
the
much,
amount
Krishna.
of positive feedback
Yeah,
that's
Krishna, one
already
thing.
come in.
Okay, thank you, Krishna. One thing I just wanted to say, the questions that Utkarsh sent to me, I have I think two questions are very good, and I think a lot of investors here can benefit from the answers that I'll provide for them. So, should I give that answers now?
Yeah, please go ahead, bro.
Okay, so first thing that people asked me was the COVID affecting pharmaceutical companies. Like some had questions that pharma company stocks are going down even after the announcement of the third COVID wave. So what is happening there? So one might think that COVID is great for the pharmaceutical industry, and to some extent, I will agree with you because vaccine manufacturers like Serum and Pfizer benefit a lot. And even if you made medicines that work against COVID, whether it is proven or not, people will buy it and make the companies a lot of money. But let me give you some points as to why, in the broad sense, this is negative for the industry in the short term, but sadly will be very lucrative for the times to come. So, diagnosis of chronic, subchronic patients stops, literally stops. So, imagine if before COVID there were 100 patients of diabetes in India, hypothetically. And after COVID, due to lifestyle changes, this increases to 130. Of this new 30 patients, only a small percentage will be diagnosed, as majority of the diagnostic labs, hospitals, and doctors will only be focused on COVID at this point in time because of its severeness. So what we see is that there will be a major wave of diagnosis of cardiac problems, diabetic problems, and other chronic and subchronic issues that can crop up in the few years that are going to come later today. So you guys might be thinking, what could drive the U.S. pharmaceutical upcycle or even a good growth in Indian market? So this could be something. Secondly, no one knows actually the long-term consequence of having COVID. And as much as I have read in the research papers in recent time, it's not great. Also, no one knows the long-term consequences of getting vaccines and getting multiple boosters. So this could create a lot of business in the future. Hello. Yeah.
Yeah,
So
Anish, we can hear
yeah.
you.
Okay. Sorry, I just got cut. So this could be though this basically the uncertainty that getting a lot of vaccines and getting multiple booster brings. You don't know how will this impact us 5-10 years down the line? We are thinking about solving the problem at this point in time, the COVID problem, and then we'll see what happens later today. So third thing, the acute business, which is the medicines that you have to take for just a short period of time. Like if I have pain, I will just go out and get a medicine for it. Like anti-infectives, if you go out and meet people, normally they are able to communicate the diseases from one person to another, has gone down drastically because people are locked in their homes for the last few years. And the businesses that sell these acute medicines, they have lost 40 to 50% of their sales, which is going to come back, and that will reflect in a lot of Indian focused pharmaceutical companies and the US based pharmaceutical companies number over the next few years when the COVID situation is normalized. So people won't say it, but pharmaceutical is more of a reopening play rather than a lockdown play, is what I wanted to clarify. The second question was, one person asked me on Heikel's latest chemical dumping issue. So as investors, so there are two worlds we choose to live in. So one is a perfect world where everyone follows every rule and there are no cutting corners. And the other one is a real world, which where Indians focused a jugaad focused culture. So something we are known for. So as I've understood from talking to pharma industry executives, is what Heikel did recently is a common industry practice. And one should just build it into the valuations you pay when you buy a company from the pharmaceutical sector. And it's better to have a basket approach because these sort of things can continue to crop up from time and again. From each and every company, obviously, some few companies will be there who will focus on the best of the GMP practices, but this is quite common in the industry. So if you are losing sleep, then you should basically go and think about evaluate the philosophy that you have with holding of all these chemical and pharmaceutical companies in your portfolio. I think that is it. Thank you. Yes, Krishna, we can move on to Q&A.
So Anish, I had one question.
Yes.
Yeah.
Yes,
Yeah, so Anish, so in the as you rightly mentioned, the marketing biosimilar is proving to be a tough ask. But do you see opportunity in say a CDMO play for biosimilar manufacturing? Say what say Lonza or a Wuxi does for Indian players? Because I haven't seen come across anybody who's at least trying to do a meaningful play apart from say isolated instances of Sputnik or something like that. But say if they want to do manufacturing for biosimilars who are say Amgen or somebody else who markets in the US. So are you getting any sense in that space? Can India be competitive? Because it's not typical India. Biotech is more Korea and say China where these companies have done well. So any thoughts on that?
You are very right, Saket. Like even Kiran Mazumdar ma'am has mentioned it in the past that the capacity that India requires for biosimilars is just not out there. It's very low compared to what we might require over the next few years. And if we want to tap the opportunity of the global biosimilars, even CDMO play, we don't have that capacity. And she always like tries the industry executives to invest more into this business. And I guess slowly they are waking up to this fact. But yes, we are very much backward compared to what capacities that Chinese and Korean players boost off. Korea, basically Samsung Biologics, the capacities that Samsung Biologics is putting is like humongous compared to what we are today. So yeah, this is a process that we will go through, and I guess Indians, due to their competitive nature, we will come up with the capacities, but it will take a lot more time than we expect. And I think Stellis has started already. Stellis has plans to Stellis Biopharma, which is coming from Strides Group. So they have plans to provide CDMO services for biosimilars. So we'll see as to how that develops. Because I think this could be a very lucrative opportunity over the next few years, where even Kiran ma'am was saying that the capacities for the world is less than what might be expected of the world over the next few years as the patent cliff comes about and the biosimilars will be required in droves, and the capacities that are already there will be valued at a much higher value compared to what they are today.
Well, thanks, Anish. Appreciate your input, and it has been an excellent discussion so far. Really appreciate
Thank you.
your time. Highly appreciated, yeah.
And
I have one dumb question.
thank you for this.
Can
Nothing is
can
dumb, please.
yeah. So can any of these chemical companies that are sorry chemical medicines that are currently in vogue, can they become like biosimilars or biologics at some point in time, and these opportunities would be lost for these people?
They are slowly waking up to the fact. Like, for example, I'll give you an example. So, Sun Pharma, if you read FY14 or FY15 annual reports, the largest player in India, they were very much against biosimilars because they didn't find it to be a viable business opportunity. But currently, they have started to talk about it in their latest annual reports, and it is visible in each and every annual report of every large chemical pharmaceutical company. But as we see from the cases that Intas or Biocon has gone through, Intas is another unlisted player who is into biosimilars, and the pain that you have to go through to get a biosimilar approved in a regulated market, to get Japan to come, or to get UK to come, or to get US to come and approve your biosimilar plant is immense. And even for example, Cadila makes a lot of biosimilars, but they don't make it as per the compliance standards that are required by US FDA. So we can make biosimilars, but can we make biosimilars at the quality that is required by the regulated markets? This is something that is a big question to me at this point in time. Obviously, we will be able to, but it is a long gestation period to develop that skills,
No,
which we
I
have
think
seen with Biocon.
I did not explain the question properly. Say, for
Okay.
instance, omeprazole is there for gastroenterology. Could it become biosimilar, biologic at some point in time? So, people who are manufacturing this omeprazole, might become like obsolete. Is that a possibility, or this never happened?
That's a really good question. That can happen. I think it has happened with a lot of molecules where the biosimilar versions or biologic versions of them are a lot more effective on humans compared to their chemical versions. So if players globally see that there is an opportunity for that the molecule that you said, and they will start doing the research behind it, and obviously, because this business works so slowly because of the US FDA and all the regulation, we will know of all these developments much before than what will happen. If we'll go and read the journals or the research papers that are getting published today, they tell you what will happen in 2035 or 2030. So this is a great part of this industry. If you want to learn, you can learn what is happening, what is going to happen in 2025, 2030, even at this point in time. So that's helpful. But yes, if they see an opportunity, then they will go for it.
Hi, Anish. Thank you so much for an amazing session.
Hi, sir.
I had a couple of questions. The first one, do you track Tarsons at all?
Yes, I actually did a write thread on Tarsons before it came for an IPO. So you can go forward and read
Yep,
that
yep.
thread. Yes, I think that will
I
be very helpful.
checked that thread out. I was just
Yes.
wondering if you could elaborate on your views or share your views on Tarsons. A bunch of people would like to hear your views on Tarsons, so I've got a few messages, so I thought I'd ask.
Yeah, for sure, for sure. So yeah, I was also thinking about doing another clubhouse session where I'll discuss all the companies. But for example, Tarson, because a lot of people are interested, I'll give you a view as to what that company does. So it basically provides consumables to all these CDMO players. So CDMO players, the people who are researching, if they need basically consumables, reusables, which are aware, or like a petri dish that you will require, pipettes that you will require in a laboratory environment. That is what something Tarsan provides, and Tarsan is one of the largest Indian manufacturers of it. So they compete with MNCs, which we have seen that they are continuing to gain market share. It's a B2B business, as I've told you. They provide to research organizations, pharmaceutical companies, R&D labs, CROs, diagnostic companies, hospitals. So it's like a proxy play on the R&D side of India. Overall, at this point in time, this sector is the total addressable market of this sector is quite small. However, it's growing at 10-15%. So this is something that is very much interesting. Another thing that is playing out in this sector is that people are moving from glassware to plasticware, and plastic is lower cost. It weighs less. It has low breakage concern, and it is also recyclable as much as I understand. And Tarsan is one of the big beneficiaries of it. So it's like a proxy play on the R&D that is happening all across India. And what we see is that it will continue to gain market share with respect to what it has done in the past. It overall, this industry is a lot more consolidated than what we will observe in other pharmaceutical subsegments. So the profit that this company makes is amazing. It's a 40, 45, 50% EBITDA margin, player, because additionally it also has the cost advantage when it comes to MNCs. Why is it gaining market share from the MNCs? Because it has the cost advantage. Some of the things that make it a very interesting player to look at. Obviously, the valuations do reflect it. So that is something that you need to think about. Additionally, what we see is that Tarsan is trying to increase its total addressable market by going into PCR and cell culture. So a lot of good things are happening with this company, and we will continue to track it. This is too early for us to make a view on this company because it's a newly listed company. But over the next 2, 3, 4 years, I think this will be a very interesting company to track. And if we get it at a reasonable valuation, this is something to look at seriously.
Thanks a lot, Anish, for your in-depth insight on Tarsans. Completely unrelated question. How do you view Para 4 filings, and do you have any, or if you have any view on Para 4 filings, and yeah, your thoughts on that?
Yes, so Para 4 filings, one of the biggest players who have continuously demonstrated the ability to do great Para 4 filings and create a lot of profits is Natco Pharma. You can study it to understand a lot better as to how it works. So how does the Para 4 filing works? So a patented molecule is already in the market. It is going through its normal patented timeline, as I told you, 8 to 12 years of exclusivity. So when you file a para 4, you can challenge the patent while the patent is on, and you can try to prove that this patent is false or there has been some misdealings to get this patent. And you can challenge the final patent, and you can file much before you file at risk. So you go through a litigation with the patent, and then you get a exclusivity period. So because there's after that, after you challenge the patent, you usually go through a out of court settlement with the final innovator where you will get a good deal. So whenever the exclusivity ends next, so after 10, 12 years, when the exclusivity ends, you will be able to be the only generic for 180 days on end, or some other XYZ deal which will be very lucrative for you. So if a company, like for example, if I go to Natco Pharma's con call, like that guy Rajiv Nannapini, he's talking about molecules that will come in FY29. So you have to see you have to understand the mindset of the promoter, and which are the promoters who are thinking a lot longer, because when you go for a para 4 filing, for example, the money that they made in Copaxone, they filed the molecule in 5, 7, 10 years down before the launch happened. So you have to have that capacity to suffer. You have to have that patience that is required for para 4 filings. But this is something that has happened in the last 10 years. What is happening in the next 10 years? So all the large pharmaceutical companies are seeing what Natco is doing. It's not that they don't see it. They don't see the numbers. They obviously observe it. So every pharmaceutical company is now going for a para 4. So we will see that going forward in the next leg of molecules that will go out of patent, we will see a lot of other companies are also investing a longer money, investing money that they won't see any cash flows from for the next 6, 7 years. And we see that this particular segment of the pharmaceutical industry is slowly getting saturated. So the profits that the previous players did make, you wouldn't expect them to continuously make that level of ROCs going forward. So this is a trend that's changing, because now Dr. Reddy is talking about, Lupin is talking about paraforce. Every other large chemical pharmaceutical player is talking about paraforce. And you have to understand, this is just 180 days of exclusivity with the innovator that you'll be selling. After that, a lot of other players will enter the market. So it will be a normal business after that. It will become commoditized over time. even though it's like 4 or 5 players will enter because it's a complex generic, but people will enter and the profits that you make will go down. So this is not something that that you can make a structural business on. This is something that you can get 50-60% profit growth in a single year, and then you can book the profits because the street then expects this profits to continue. But this is not, this is a very highly cyclical business where you have to uh, enter and exit right, until unless you are betting on the promoter's ability to continuously find such profit pools. This is a very tough business to execute on. But yes, it's a lucrative business if you are able to do it. Very few will be able to do it, and the competition that we are seeing currently, I don't see a lot the profits that these companies have made in the past to continue.
Thank you so much.
Okay.
Yeah, Anish, I just have a follow up on Natco.
Yeah.
The Revlimid opportunity that's coming up over the next couple of years is going to be pretty big for Natco, and because the market share is going to be predetermined, uh, the chances for price erosion also seem like they're going to be quite less. So, one, what is your view on Natco's Revlimid opportunity, and what does Natco look like to you post Revlimid?
Yes, Krishna, I totally agree with you. So Revlimid is a very big opportunity and a very lucrative, possibly a very lucrative opportunity for Natco over the next 3-4 years. And till FY26, that is when a lot of other generics will enter the market. Before that, obviously, it's the market share is predetermined, and the pricing most probably should be similar because the innovator wouldn't think about decreasing the price as much as I understand, but it could be different. Let's see. This is something even the management hasn't cleared at this point in time. But after that, if you're betting on Natco, as I told you, it's all about betting on Rajiv Nanapini. Do you have confidence in him that he'll be able to provide fine profit pools for the next decade? Is what you have to ask yourself as an investor. Is what you have to, after reading all the annual reports of his, if after reading all the con calls of his, is the decision that you make on your personal understanding. But I believe that this guy has shown the ability to continuously re-innovate and find new profit pools. I think the risks that this guy is taken with the agrochemical business is quite commendable. How many pharmaceutical companies have you seen going to agrochemicals? No one. So this is something that if you bet on Natco, it's a bet on Rajiv Nanapini. It's not about the bet on Revlimid 3-4 years profits because everyone knows about it. The bet is on Rajiv Nanapini, and that is what is valid with a lot of pharmaceutical companies that you bet on in India. It's the bet on promoter because even though the market is big, the market opportunity is big, the competition is immense, and the promoters, your promoter, the person you're betting on, the basket of companies that you're betting on, their ability to navigate this whole chaotic environment and then also create profits for you and a good return on capital for you is what will determine how much money you make over the next decade.
Thanks, Anish. That was really helpful.
Yes.
Anish, what's your view on Gufic, like Gufic?
Yeah, currently I'm just on the research phase at this point in time with respect to Gufic. We haven't had been tracking that company in the past, but yes, with respect to what they have developed on the botulinum toxin and the optionalities that that particular drug brings. So for the guys who don't know about botulinum toxin or Botox, single I guess milligrams of it is enough to kill every person on this planet. It's that toxic and it's very tough to handle. So this is something that they have cracked, which is extremely commendable. But let's see how are they able to monetize it because the market opportunity in India at this point in time is very limited. It's just 120 crores, and globally, yes, the market is big, but then there are other players too. So how are they able to monetize their R&D capabilities is what is something that I'll be very keen to track going forward. But definitely, what they have achieved is extremely commendable. Yes, if anyone has any other question, please.
We can
Hi, Anish.
Yeah, Mita, please.
Yes, Adidash.
Yeah, hi Anish. Thanks for
Hi.
that excellent lecture and detailed overview about the pharma. So,
Thank you.
may I know or understand from you how do you filter out the parameters for a CDMO business when you evaluate a company? Because you have to come across from the research oriented to a manufacturing oriented CDMO player. So, what are the things that you generally look into or filter out when you are evaluating such CDMO businesses? Like from Syngene to Newland Labs, then Jubilant Life Sciences, Divis, Hikal, PI Industries.
Yeah, that's a good question, Aridash. So what I see is that I'm very much curious as to what is going on Nature magazine. So the latest innovations in the world. What is happening with the CRISPR technology. What are the companies in globally are going forward? What are the companies which are innovators looking for over the next few years? Because that is something where the scientific capability of an Indian CDMO player will be tested. I want to do XYZ technology. Do you have that? And then when I have already made the list of the technologies that are going to become big over the next 5-10 years, the mega trends in the innovator space, I go and see the annual report of all these CDMO players, and I match as to what are the technologies that they are building today. Because if they are building it today, it will take them 3, 4, 5 years to build the capability. And for example, I've seen that yeah, like Piramal Pharma has this ability to continuously do a lot more acquisitions to just gain these capabilities, because it understands that even though it's paying a small amount in the short term, the gains that it can accrue from it over the next 5-7 years is huge. For example, it recently did a peptides acquisition for like 10 times sales. So you get an idea. They are doing expensive acquisitions, but then they are betting on the capability. Recently, they even did an acquisition for bio to enter into the biologics business because they understand the potential. When I see a latest technology, I have seen that in Syngene. Syngene has shown the ability to develop the latest technology, and by using that, they will be able to differentiate compared to each and every other CDMO out there. So these are the two companies which have shown me the capability to do it. DVs is on a different scale where they focus on their customers' API needs and in particular specific chemistries. Even for example, Newland is doing great work on the peptide side, which if they are able to find a blockbuster molecule, they can churn out a lot of profits going forward. But yeah, that's the risk that you take. The people who are betting on Newland today are betting on the optionality that it will be able to find a blockbuster molecule. So that's the risk that one takes. But yes, if it works out, then there are a lot of optionalities that I see. And a lot of CDMO players are doing great work, but then again, some of them are so much more forward looking compared to the others. The terms that you read in their annual reports, and then you ask the promoters about them, and then they say that even people have asked this in the con calls, like they are continuously working to provide the best technologies, the latest technologies, the pharmaceutical business to their customers. Then you know that these are the players who are going to become the biggest beneficiaries of the tailwinds that we are seeing. I hope that answers your
Yeah,
question,
yeah.
Adhilash.
Thanks a lot. So, do you also look into the cash conversion cycles of these companies when you're evaluating maybe a Newland to a Syngene or a Jubilant Life Sciences or so on?
Yeah, any day, any day. So if a cash conversion is a lot longer for some player compared to the other, then you get an idea that it has lower say to their customers compared to the other players, and the other player might be providing a lot better service and a lot higher value service, such that the customer would pay him a lot faster. So this is a big important factor that is valid for each and every business, which you can apply into this business too. But obviously, I will always prefer companies with very strong balance sheets, because if we are talking about growth that is going to come over the next 5-10 years, it will require huge amounts of capex. It will require huge amounts of investments in working capital too. So I would prefer to buy a company which has the financial capability to invest, and even if it's in the listed space, can it raise money through equity, and at what valuation will it raise money through equity? If it's getting a lower valuation, then it doesn't work for it. If it's getting a very high valuation, then if it wants to grow at a much faster rate, then it can grow, because it will have the capital for it, is what I see.
Yeah, thanks a lot.
Anish,
Saurabh
Yes.
had a question. Yes, Saurabh, please go ahead.
there was a question from the audience about Newland as well. If you had
Yeah.
any view on it.
So yes, I told you. So at the end of the day, what you are betting on Newland at this point in time is that is on this CDMO business. What they are doing on the API, on the specialty side, and on the prime APIs, which is the commodity APIs, is pretty fine. They are coming up with new molecules and they have good amounts of process chemistry behind it. But what you are betting on, at this valuation, what you are betting on is the CDMO business giving you some blockbuster. It's that simple. So they have, as much as I remember, 20 to 25 molecules in the fag end of the final trials. So in the pharmaceutical landscape, once all your trials are done, you will send the report to US FDA. And if US FDA approves that molecule and then it gets accepted in the market and it becomes a big molecule, 100 million or a $1 billion molecule, then Newland benefits a lot. But that's a big risk. At the end of the day, no one really knows if it will happen or not. If it happens, good for investors in Newland. But if it doesn't happen, then you are just buying the API business of its. But even in the CDMO side, yes, they do have they do have good relations with MNCs and even Japanese players. They have good relations with and small and mid biotech players in US. So I see that that business can continue to grow at a very reasonable pace for a long period of time. But then again, it's a small part of their total business. So if you're buying Newland today, what you're betting on is what Mr. Davuluri also explained in the last con call is a blockbuster coming up over the next few years, which I would recommend is a low probability, high impact event. If it does happen, then you will have the time of your life. But if it doesn't happen, then I think then nothing. Basically, it's a normal business. It's a normal API business with a normal CDMO business, which is a high margin, but a small part of the total business. But yes.
Any view on the
Hi,
peptides
hi.
part of the business?
Yes, sir. So as I told, so on the specialty APIs, even now Newland 50% of the Newland APIs are commoditized, where they don't have much pricing power, where it's market determined, and they don't even have that level of cost efficiency compared to the other players. But on the specialty APIs, they are building specialty APIs, which includes peptides, which are going to come up. Some peptides are going to come up for the next 1 year. I think they have good amount of cost efficiency and process chemistry behind it. So there is a potential that even if the CDMO side or the blockbuster side doesn't play out, you can see a 10 to 15% consistent growth with an increase in margins over time because of these latest launches that Newland will do on the peptide side. But this is something that is probable, that can happen, high probability. But then again, we have to see as to how much is Newland able to produce, because these are very much easy to do in small batches, very much tough to do in very large batches. So we have to see how does the Newland management executes on the manufacturing side over the next few quarters, which they have been struggling with, to be very honest, over the last few quarters, which is common, which happens with each and every pharmaceutical business. So let's see how are they able to execute on the manufacturing side of these peptides, and are they able to crack it, and also on the CDMO side, if they are able to showcase any blockbusters. So yeah, so these are optionalities that can play out, but overall, yes, the normal business can consistently grow, and the incremental business is happening at a higher margin.
Hi, Anish. Saurabh
Hi.
this side. Thanks for the
Yes.
session. It was
So
really great. So I just
thank
have
you.
a question. See, you told that India is a market. It is market for basically branded generic, right?
Yes.
So in case government of India someday mandate that doctors must write the molecule name rather the brand name. So how do you see the pharma market then in India? It is means there has been demand for writing molecule name rather brand name. So what impact it could it it can lead to on in Indian pharma market? basically?
That's a good question. And recently, even Ishmohit wrote an article yesterday, and I saw it, and it mentioned that this is happening. The thing that we said, that government is asking the doctors to write more generic names of the medicines and not the branded names for a long time. This is not the Indian Janta, Indian average Indian hasn't been poor for just the last few years. He has been poor for the last 50, 60, 70 years. And the government wants the doctors to write the generic medicines, but it is not happening because we have to understand incentives. So doctors are normal human beings. They are not bad people. They are just incentivized in that sort of a way that if you write my medicine, which is a branded generic, you will get a Switzerland trip, or you will get an iPhone, or you will get XYZ other thing, or you will get some more money. So they are incentivized in such a way that they won't go this way. There are few doctors who even after this go the more generic sort of way, and they try to write generic medicines. But overall, 90 to 95% of Indian doctors would prefer to stay in this basket because it's just much more lucrative for them, and they are human beings after all.
Thanks. Means there is a possibility the government may mandate, and in that case, it will be just like US generic market.
Yeah, but government, the pharmaceutical companies won't let that happen. Hopefully, is what
Yeah.
we see, and this is something that won't be mandated, and it won't happen as easily as we talk about it. The generic players have been trying to do this for decades on end, but this hasn't happened. And as much as I see it, this is never going to happen. And even though the government will mandate it, we have to understand the incentives is just not aligned. The government will not put doctors in jails if they are not writing the generic medicines, for sure, as much as I understand. So, so this is something that is a gray area, but as much as I see it, it's a low probability event. Obviously, a high impact, but it's a very low probability event.
Okay. Thanks, Anis.
Yes. Yeah. Any
Anish,
other
just
question?
wanted
Krishna,
to
can I
check
go?
with you on time.
Yes.
How are you
It's
doing
a
on time?
It's okay. It's okay for me if people have questions, and we can continue it. No worries.
Because I've just got like 17 questions in DM, so I'm going up.
Yes,
I'm going through them one
go.
by one.
Yeah, please go ahead.
Krishna, bro, can I go? Please.
Chetan, you go, then I'll go next.
Okay, thank you. So, Anish, bhai, great session going, brother. And I would like
Thank
to
you.
hear more from you, from your interested areas like IT, real estate, and everything else which you can share. And
For
Krishna, bro,
sure.
if you're going to conduct speeches for it, please give me a call. Okay, thank you.
Thank you.
So,
Yeah, I mean, I would love to, absolutely. I think
because
after
sometimes
today,
you, because
there's no
sometimes you,
question.
yeah,
Yeah,
because you
we
you
can
also
cover
do
each and every
Twitter
segment.
spaces,
No
na?
worries.
So that's why. Yeah. So, Anish, I just wanted to ask you that we most of the time, because I am not a pharma expert or just a normal guy, so I
Hmm.
just wanted to know from you that lots of time I hear this now that Indian people and other companies also depend on China for raw material, right? So
Yes.
I just wanted to know, just a curious question, that why Indian companies are not doing that backward integration, or why they are so much dependent on raw material for China from China.
So that's a very good question. Are you guys able to hear me?
Yeah, loud and clear.
Okay, so Indian API industry was very big in the 1950s, 1960s, and 1970s. But what really happened was we really lost along the way. The Chinese API players came into picture, and the Chinese government provided them so much incentives such that they took over the whole market over time, and the Indian API players had to shut down their shop. But as I told you, this is something that had happened over the last 20, 30 years, slowly and steadily, with the manufacturing stoppages that China is going forward with. They are thinking about the environmental impact from this point in time, which we have seen even in steel industry. I guess every manufacturing that's happening in China is slowing down, and they are thinking about the environment. They are thinking about putting the environment first. And what is that making the Chinese players do? in every manufacturing that Chinese manufacturers do, the cost structure is increasing, and the subsidies that they used to give these players is going down for exports and stuff. So China, what I understand geopolitically, is China wants to transfer all of its manufacturing facilities to lower income countries, other lower income countries. And what it is, the problem that it's facing is the average income per person is now exceeding to a very high limit, so that these people are not wanting to work in manufacturing area. So slowly and steadily, China wants to get out of manufacturing. Slowly and steadily, it will happen. It's a decadal play. China understands that the income per person is increasing by a lot, and at some point in time, you just say that why should I work so much in a manufacturing hub if I'm earning so much? So China is understanding that the labor problem of China is a big thing, and slowly and steadily you will see that manufacturing move on to other countries. It could be India, it could be Taiwan, it could be Bangladesh, and it will happen. If we have good policies, then we will be a big beneficiaries. And this is what is also helping the Indian API players now, because of the capabilities, scientific capabilities that they have built over the last 5-10 years, where the the market situation that they went through was extremely tough for them to survive. If you can see, most of the companies haven't created a lot of wealth. They were trying to survive. Now the situation is turning around for them, and the situation is turning much more lucrative for them. And because they have already built the scientific capabilities, now they are becoming slowly becoming the lowest cost producers in their respective molecules. So this is what I see, that slowly and steadily the Chinese API manufacturing will come towards India, and even India manufacturers will become much more competitive with respect to China, and we will slowly gain market share. And we have seen that in the numbers over the last few years, and I hope that it continues as much as my thesis says. I hope that answers.
Thank you, Anish.
Yeah.
Yeah. Hi, Anish. This is Sumit this side. I have one question, and this is company specific.
Hello.
Particularly, it is
Hello, Sumit. I'm not able to
Glenmark.
hear you.
Okay, is it audible now?
Yes, please go ahead.
Yeah. Anish, thanks a lot for taking the time out. I
Yes,
have one
thank you.
specific question, particularly with respect to Glenmark Pharma. Of late, in last 9 months or 1 year, more or less what they have been saying, they have been doing that. Whether it is ICNOS or the deleveraging via their subsidiary, or even going out of way to go for intermediate solution for the couple of molecules for ICNOS, the debt has been reducing. What's your particular view on this company specific?
So I'll be very honest with you. I've not been tracking Landmark Pharma to a very large extent, but what I like is from that group is that Glenmark Life Sciences, the things that they are doing and the margins that they make on their particular products, and the next leg of products that they are thinking about. It's basically a API business. I see a good growth happening there over the next 3-4 years. Obviously, that company gets a discount because of some uh, past actions by Glenmark's promoter, where they haven't been uh, with respect to how the street wanted them to be. So, other than that, I see much more higher growth and bigger opportunity in Glenmark Life Sciences compared to Glenmark Pharmaceuticals. That's why I've given it less notice. Thank you.
Thanks.
Hi,
Because
hi Anish.
Yes. Hi.
Yeah, so just I think Sumit sir is done with the answer. If he allows me, I'll ask my question.
yeah. Please go ahead. Actually, I just had one follow-up because Pharma has a unit called ICNOS,
Yes.
particularly in Europe. So that is probably going some T cell research and probably the confluence of biologics as well as the next leg. So have you looked into ICNOS part of the same company?
Now, this is something that is new to me. I've like read about it, but I've never really given it deeper look. But because I think it is interesting me, I will get a deeper look into it, and I will share it through my Twitter profile. Most probably, yeah.
Th-
This sounds interesting.
Thanks a lot.
I'll give it a look. As much as of now, I haven't. So
Thanks a lot.
thank you.
Yeah, hi Anish.
Yes, Samir.
Yeah, so I just wanted to need your views on Syngene as a like अभी वो इसमें है, they are into the biologics part. I
Yes.
think that's what they are playing out. So what do you think about Syngene on a biologic play? And second question is related to Biocon and the Mylan deal. Will it going to be benefiting Syngene in any which way?
Yeah, on the first thing, on the Syngene side, yes, I've already mentioned they are one of the leading players when it comes to CDMO in India. You can call them as Infosys of CDMOs. I think they could be one of the biggest beneficiaries. Yes, one of the optionalities is the biologics capabilities that they have developed over the last few years, and let's see how much deals are they able to win, because this is something that you give as a package to your customer, because your customer will have chemical molecules, your customer will have biologic molecules, everything that he wants to do research upon. So this is something that you build a better relationship with the customer, and you can see it with Syngene that they have been increasing their deals. So previously, if they were having the deal till 2026 with BMS, they have increased it to 2030. Before that, it was just till 2020. So they are becoming very strong relation. They are making very strong relationships, and I think this happened with another one of their customers. So they are making very strong relationship with the global innovators, and I see it as of a like a deal game where if you have all the technological capabilities, then customers like you better, and over time you will become a larger percentage of their wallet of their R&D. So this works for Syngene in that sort of a way, not that just the biologics business will become big tomorrow. It will take a lot of time. It's a high gestation business. Even if they start developing a molecule today, it will take like 7-8 years. But on the Biocon and Mylan deal, this is like very early for me to say anything. As I mentioned, I haven't looked into the intricacies of the deal. As soon as it enters the physical arena, the investors arena, I'll give it a deeper look. I'll try to understand what capabilities or what pipeline are they getting from Mylan, and then take a view as to where this company can go over the next few years. But at this point in time, I can't really say anything. I know as much as you do. So it could be positive, it could be negative. Who knows? So let's see.
Yes, the extension that you were talking about, I think it's about the 3DC. The
Uh,
Deerfield Discovery and Development Corporation has increased
okay.
their,
Yes.
yeah.
And there's some other also. I guess some big company also. Some MNC. Basically, what we have seen is that Syngene is continuing to gain new customers and new technologies. So this that works good for them. And on those terms only, if Piramal Pharma is going forward with so big acquisitions, because they know that if they are not providing these services to their clients, they will lose their customers. And I guess that's why they are doing such big acquisitions.
And any close competitor to Syngene with respect to biosimilars or biologics in the Indian equity
It's a Chinese
listed?
players. It's a Chinese players. Chinese are so much better in biologics. If you see the division of Wuxi, which is one of the largest players, CDMO players, they have grown their biologics division is 50-60% over the last few years. Samsung Biologics is another one. So Syngene, even now, it's a very small company. To reach the scales of Wuxi or to reach the scale of Lonza or
Lonza.
Samsung Biologics, it's a long way
Yes.
to go. It's a long way to go. So this is something that is good. It's good that they are working on these things, and hopefully it will work for them in a positive manner over the next few years when the tailwinds are really there, and it is currently there, and hopefully it will be there for the next many years. Yes.
Anish sir, I had a question. Actually, I
Please do
had
call me sir. Just
yeah,
Anish, no. Yes,
yeah, Mr.
Anisha.
Anish.
Yes, please.
So I had two questions. First question was you just mentioned that pharma companies do have a very volatile cash flow. So I just wanted to ask that will the parameter of judging a company using if it is financially compounding its free cash flow work for while evaluating a pharma company?
Yes, I think Mr. Sajal Kapoor, also known as Unseen Value from Twitter, has talked about this multiple times. This is a very important factor to judge any company, not just pharmaceutical company. But yes, what you will see is that, as I've told you, the India business will be a secular growth play where the working capital investments is limited and the capital investments is limited, and they will continue to increase their cash flows at a rate of 7, 8, 10%, whatever the growth rate of the market is. But with respect to US, the cash flows will be volatile, will be very much volatile. So there is something that you need to see how each and every company is able to navigate that US market wala business. So overall, on a consolidated basis, yes, you will see that most of the companies have been consistently able to increase their cash flows, other than a few ones. But yes, this industry is going to be a wealth creator. It has been a wealth creator in the past 20 years. It is going to be a wealth creator in the next 20 years. So, getting great companies in this business and sitting on them for long periods of time could do wonders.
So will it be different? Means the volatility of cash flow, will it be different for CRAM companies, or will it be similar? Will it follow the similar kind of pattern?
So as I told you, so overall, when you talk about CRAMs, so there's one part is researching, where you find the molecule to work upon. The second part is developing, where you do all the clinical trials, and the third part is manufacturing. So from the researching and the manufacturing, if the company is doing the right things, if the company is gaining the right technologies, this business is going to structurally grow at a very normal, good pace, like 10-15% growth consistently for a long period of time. As I told you, manufacturing side, in the initial years there will be some dip, but over a long period of time, when the manufacturing facilities that they have invested in scale up, then you will see there's a high optionality. So the cash flows can jump up a lot faster than what they have done previously, when the manufacturing facilities were just going through the investment phase. So overall, what I see is that the downside risk on the cash flows is less compared to other business segments in this particular segment, and the upside optionality is huge. If they are able to crack any molecule, if one molecule works out, then they make like hundreds of millions of dollars for a long period of time every year. If one molecule becomes becomes a $1 billion drug, it's a very low probability event, but it's a high impact event.
Okay, that was great, sir. One last question that I have. Would you like to name any company manufacturing mental illness drugs like depression, schizophrenia, and psychopaths, means mental illness drugs?
Yeah, I understand like what people have gone through during the COVID. This is a segment that will grow at a much rapid pace, as much as I understand. And even, for example, people have talked about this ophthalmology, which is the eyes, the medicines that you'll require to put in your eyes, because you are seeing a screen 10 hours a day, 12 hours a day, 15 hours a day at times. So these are the segments of the business which can grow at a much rapid pace than what they have done historically. But you can find a lot of companies which have like portfolios in them. If you just do a basic search in Screener, and then look into the annual reports of the companies, you will find that most of the companies have these medicines. But then again, these are like 5, 10, 15, 20, 30% of their total India sales. So impact will be a little less on their cash flows, as much as we want it to be. I'll try to find some smaller companies where the percentage of business that comes from these segments are a lot higher. But at this point in time, I haven't found any. So if I do find it, I'll do share it in Twitter.
Thank you, sir.
Thank you.
Hi Anish, you just explained the cramps right now, right? So I
Yes.
wanted your view on Decal, Dishman Carbogene, as it's being a cramps player and an international player, and around 25 molecules, as I read, are in third phase trials, right?
Yes.
And it has excellent R&D in Switzerland and all over the world. Also has a manufacturing facility in India. I wanted to know your views on this Decal, if you have.
Yeah, so I just have a very like 10,000 feet view of this company. Overall, yes, this company has the capabilities and the customers to cater to them, and also is putting a lot of capacity. But I would prefer a company which is more on the India side, because they have plants out of India where the asset turns and the return on capital that you could generate from that investments are a lot lesser. It's 15-20% compared to 25-30-40% that you can do from India. So I would prefer, if I'm betting for the long run, I would prefer companies which have plants inside India. But if you get a company like Dishman at a very low valuation in a bear market, then you can look forward to it. But overall, prefer to bet on the higher quality names. And the recent a lot of things have happened where I would prefer to go with a higher quality India focused name.
Hi Anish, I have a question on.
Om, you can go next.
Yeah.
Sorry, Rafi, Om has been requesting. So,
Yeah.
Om, if you have any questions, please.
Yeah. Thanks, Krishna. Hi Anish, I have a question on biologics and biosimilar CDMO. Recently, I was just going through an article where uh, bio compared to normal chemical drugs, producing a biosimilar is not as easy as we think. The cost of producing a biosimilar is almost like 80% or 70% of the actual cost to produce a biologic. So even someone
Yes.
actually put that effort and then produce some biosimilar, the cost is so high they have to sell at about 30% premium to the innovator. So in this case, the innovator actually straight away reduce the cost by 30%. That is one antithesis. The other antithesis is, why would a doctor risk uh, to prescribe a biosimilar compared to biologic, where the cost also are more or less same? Number one. Number two, unlike chemical drugs, biosimilars are not like to like replica. It's altogether different way of making the drugs. So I just wanted to understand your thoughts. Thanks.
Whatever you have said, Rafi, just one pointer I will make. Like normally, it's to develop and manufacture a biologic, it usually takes $1 billion. But biosimilar, you can do the total process in 200 to 200 million. So other than that, yes, the pointers that you made are very much valid as to why the biosimilars are not picking up at pace that we had all expected it to be very honest. So these are some things that have played out. The doctors in US are pretty much resistant in approving biosimilars at this point in time. But as I mentioned, we can just hope and wait for the government policies and the US FDA norms and interchangeability statuses to play out and somehow reverse these trends. But obviously, this is not going to happen overnight. So it's going to be a tough time for the biosimilar players, at least for some few years, and until unless the next leg of biosimilars play out, and hopefully by then all these antithesis pointers get addressed, because obviously we know all these things and all the companies who are selling biosimilars also know all these things, and they are all trying to somehow reduce these issues with working with the governments and with the regulators. Because even the government, if you think in the if we are in the shoes of government or the regulator, each and everyone wants cheaper prices for the drugs that the customers are paying. So sooner rather than later, this revolution, for the lack of a better word, is going to happen. And currently, the problems that they are facing is what you have mentioned. Yeah, you are like 100% right on the antithesis pointers.
Yeah, thanks.
Yeah, Pravi.
It was Om next, right?
Yes.
Sakir?
Yeah,
Om had something to add. Om,
Yeah.
if you can.
Yeah, please.
No. Sakit, I'll let you go to the next gentleman, please.
Hi, this is Nanda. Anish, thanks for the great session. So I just had a question about Sequent Scientific. So what are your thoughts on their, new pivot 2.0, and also how do you see that playing out in the next few quarters and years? And also, I think they've announced a management change as well, I believe, today. So what are your thoughts on that, considering it's one of the few animal pharma players in India?
Okay, Mr. Manish Gupta just resigned. I just came to know about this.
Yeah,
I haven't really checked.
it was announced. I think it came out on Twitter while the session was going on.
Oh wow, this is a very interesting thing that happened.
Yeah.
Because what we were thinking as to this Mr. Manish Gupta's vision was being applied, but this resignation is like a surprise to me.
Yeah, the new CEO is coming from Sanofi, and he's
Yes.
ex-HUL and Airtel, I believe.
Yeah, but then again, because any time a promoter or a CEO changes, then the vision of the whole company will change. and how it inculcates with the past culture of the business is what normally creates a lot of issues. And it takes time for a new CEO to come and put on his vision and make it in line with all the other people. And I guess people used to have very strong connections with Mr. Manish Gupta.
I think
Which
he will
is
stay on as a consultant. That's what I read, but I'm not really sure.
But normally, if he's not the CEO, he's not the CEO.
Yeah, of course,
As much as I
that is true,
understand.
right?
So let's see how it develops. But overall, what I see is on the Sequent, they are taking big bets. They are investing huge amounts of money into acquiring new companies, and they will also go forward with a US front end acquisition over time. I think it will be a big acquisition. It will at least 100, 200 crores acquisition that they have to do in the US side. And we have to see how are they able to scale up their US formulations, what they are currently developing. They already have good structure in APIs, and that could be a secular business for them. And the latest APIs that they are developing on the animal API side could work out pretty well for them. The main bottleneck and the main optionality and the risk that is out there is the US formulations working out for them. If that doesn't work out for them, then the business could be in trouble because they have invested a lot of money into it. So this is something that I'll be pretty much tracking into as to how they are going. Because obviously, once they reach scale, then this business is an extremely lucrative FMCG sort of a business. But the process to go and become a larger player in US in formulations, where there are large players like Zoetis, and competing with them, it's not going to be an easy task. And let's see how they do it. It's a very dynamic sort of a thing that's happening with this business. And even the PE investor, you are never really sure what the PE investor wants. I'm very
Carlyle
much
entered
convinced.
much earlier, and we never know when whether they want to continue or
Yeah,
they might plan an
he can
exit.
go down.
Yeah,
He can go out tomorrow. That's a big risk. And other than that, the vision changes. Vision is very much volatile, as much as I see after the PE has entered.
correct. That's right. Even 2.0 came only recently, like last 1 or 2 quarters, I believe.
Yes. And the execution part on the 2.0 is going to be very much tough compared to what they are projecting, obviously. Because people ask me why haven't like Indian players, other chemical players have entered the animal pharmaceutical business, because it's extremely tough to do so. There are it is a very high entry barrier business. Obviously, once you enter it, then you enjoy good profits. But before that, it's a very tough thing to do. That's why they had to hire consultants, Stonehaven, just to know about what is happening in the industry. It's so opaque. So just imagine the climb that they have to do over the next few years. And I had this thing that Manish Gupta had a good vision. So now I'm a bit surprised as to what has happened. So let's see how it develops and what the new CEO brings to the table.
Thanks a lot, Anish. That was helpful.
Thank you, Nanda.
Hi Anish, Shri Kumar this side. So, what is your view on Gland Pharma business model?
Yeah, but one of the bear. Yes, I think I didn't mention it, but yes, Land Pharma is one of the better off injectable players. So, injectable manufacturing is one thing where the Indian normal medicine players have faced a lot of issues. The compliance standards that you require with respect to injectables is much more strict compared to the normal medicines, the solid dosages, the tablets, normal things. So, so Gland is just a play on that. It's like people will come to Gland to get their manufacturing capabilities and their impeccable compliance record. No doubt about that. So, so there has been talks that other people will put up their own injectable capacity, but we need to see as to how are they able to get the compliance standards for the injectable capacity. The putting up the capacity is an easy thing. You can have 1,000 crores investment and you can put up a capacity, but getting the compliance right and continuing with the best standards of compliance over a cycle is very, very tough. And that's why you can observe that Gland does get a premium over a lot of other Indian players, because it has shown the ability to consistently maintain the compliance standards. and that is that. And additionally, they are coming up with latest innovations on the injectable side. They are coming up with a lot of new, much more complex generics. So this is something that is playing out with land, and until unless the Indian players who are putting up a lot of injectable manufacturing plants prove that they can do it with good compliance, you can't see much competition ahead for Gland, and I think it could have a good run over the next few years easily. I hope that clears your question, Sri Kumar.
Yeah. Thank you, Anish. Thanks.
Yes.
Awesome, Anish. I think that was the last question. What
Thank you so
an
much.
insane session we've had. It's been an absolute masterclass in the pharma space, and I think if I had gotten this presentation like 5 years ago when I was getting into investing, it would have saved me a shit ton of time. But
that was the main motive. We'll continue to do such sessions of the sectors I know of, and my team member are also quite knowledgeable in different sectors, so we can think about more and more sessions regarding, because if we go come and teach you, we also learn a lot of things by putting our thoughts down.
yeah, I mean, I was there for Aditya's session on DRHPs at in the Accelerator Summit, and even that was a really valuable session. It's been really fun to have you here, and me and Utkarsh have just been discussing all the ways in which we can collaborate with you in the future. So
Let's collaborate a lot more. Like we have a lot more members in GSC Investments who will be keen to share their knowledge, and we would love to do it. So let's think about more and more sessions going forward for sure. And even in the pharmaceutical sector, there's like 2-3 sessions that we can do even now. There's so much to talk about.
yeah, let's.
Hi, Anish, just a
Yeah.
quick question.
Yes, please.
Hello, am I audible?
Yes, please, sir.
Yeah, Anish, sorry, right. So just a quick question. If by chance have you ever went through Titan Biotech, and if you have went through, then what is your view?
Sorry, Saurav, I haven't gone through Titan Biotech.
Oh,
But what part of Titan Biotech do you like?
this they're basically into peptone business.
Okay.
So if you have any view on that, that's why.
No, I haven't really looked, but is it a niche company?
Oh,
Is it something that very few players are doing?
no, not like that.
Okay.
Not that.
It's a small company, Abhi.
Yeah, right. Very small company. Equity is hardly 200 crore, I guess.
Oh, it's small. I'll take a look at it. Thank you. Thank you for telling me about this company.
Cool, guys.
Just a request.
For sure.
Just a request that at least do a next club session on diagnostics and hospitals at least. Krishna bro.
No, we'll definitely plan it, Chetan. We'll definitely plan it.
We'll do it.
After result season, like let's do it. Let's do hospitals, diagnostics, consumables, and even this GMM and HLE. All of these are related to the pharmaceutical industry somehow. So
Yeah, done deal. Utkarsh and I will be very happy to host you anytime.
Definitely. And
Utkarsh, I hope you're fine.
yeah. I have some fever, but
Some fever.
it's all good. Anish,
Don't
thanks a
worry.
lot.
Keep a positive attitude. I think it will go away. It's all about
Yeah,
the attitude.
definitely. So Anish, thanks a lot for coming today. We've been it's been like almost 3 hours since we started, and it's been
Yes.
absolute full of learning these 3 hours.
Thank
And
you.
I'm
Thank you so
sure
much.
all the people who have been with us during the entire session, they must have learned something new. And definitely we'll keep doing such sessions together. For I think you also have a good grip on IT sector as well, right?
Yeah, we can
Perhaps.
do an IT sector also once all the results are out, because this quarter will be like a very important quarter to watch out. As
Right.
to understand
And
what the longevity of the growth is, because the valuations are already very high. No?
definitely, we have seen a lot of changes in this sector over
Yes.
the past 1.5 years.
It's a
And
very much an enigmatic sector at this point in time. Like there are two
definitely,
boxes. One is like the growth will last for 15 years, 20 years. One is like the growth will last for 2 years. So
right.
so we are actually trying to understand that, and we'll definitely think about doing a spaces on that, clubhouse on that.
Definitely. Oh, and so guys, Anish is a partner at GST Investments. It's a firm run by Anish, Aditya Kondavar. He's also a dear friend, and
Aditya
another
Shah.
part is Aditya Shah. And these guys they write brilliant threads on Twitter, and their research is like really in depth.
Thank you.
So do check out Anish's Twitter handle. We have pinned the link just above this session, and you can also like check out what GST has to offer and see if they could be a right fit for you. So thanks a lot, Anish, for coming by. Krishna,
Thank you
would you
so
like to
much.
say some
Thank you
remarks?
so much for everyone who stayed. I see that 1.8K people joined. So thank you so much for your time. Thank you. Thank you.
Anish, I just want to congratulate at such a young age. You are so much energetic, man. Really.
We will show this energy for a long time in many different sessions. I loved it. Thank you so much. Good night.
Yeah,
Good
guys.
night, everyone.
Good night.
If you
Thanks
haven't
everyone.
followed Anish on Twitter, please go follow him on Twitter. The link is pinned. If you haven't followed GST Investments, go follow them. And also Aditya Kondawar, who was the speaker at Investor Accelerator Summit. With that, gonna say one last thank you to Anish. It was
Thank
an
you, Krishna.
absolute masterclass in pharma. And I really look forward to hosting you again, along with Utkarsh and everyone at Team DIA.
Thank you to the team DI for hosting this. I never expected to hold to speak to such a big crowd. Thank you so much, and I hope the recording will be there so people will be able to get the benefit of it.
Yeah, yeah,
Yes. If, yeah.
yeah, it'll be there.
Yeah. So look forward to talking to you later. Okay. Bye.